The OPEC decision is more like a catalyst on top of something that's already moving the other direction.
If I were in the Federal Reserve's position here, I would not look at higher oil prices as a reason to get tighter.
These crises just push us off kilter and make it very difficult to get back to where we need to.
The markets are saying real interest rates are going to be positive at a significant level for the next decade.
I think the market is telling you that investors are starting to exhale a bit, even if they're not breathing easy just yet.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowicz, and Tom Keene on radio and television from our studios in Washington and New York. We say good morning on a Tuesday. Lisa, there are at least 14 major stories this morning. We're over with Maria Tadeo in Brussels and Finland. We have an indictment and arraignment in New York. We have the markets. We have the economic data. Let's summarize it up. The two-year yield, that indicator of all, falls below 4%.
That, to me, is the theme, because what we're looking at right now is a massive credibility gap, with the Fed saying that this economy is too hot for comfort and markets saying, no, it's not. We're careening toward recession, and we're pricing in much lower rates ahead, Tom. And the news yesterday, for those catching up after a long weekend, it's simple. The Atlanta GDP Now indicator clearly shows what Lisa's talking about, which is a slowdown in first quarter GDP from a statistic of 3.5%, 10 days ago, Lisa? 2.7%, and now beneath 2%. This is really the tension. And yesterday's ISM manufacturing data came in at some of the lowest rates since we've seen since the peak of the pandemic. So how do we piece this together? Is this a rolling recession within specific sectors? Does it not reflect the reality because the data is noisy? To me, really, yields speak volumes. And right now, it's not just the 2-year, the 6-month T-bill yield. Tom, you've been talking about triple leveraged all cash and how much a 5% psychological bogey is really getting people to move their money into money market funds. Well, that is now down to about 4.5%. So we have lost about 0.5 percentage point of extra yield in just a snap of the fingers as people reassess just how hot this market truly is. And we reassess into economic data. We are going to cover the indictment and arraignment down this afternoon, I should say, in Lower Manhattan. Our Kriti Gupta on to watch there. We have Maria Tadeo in Brussels, and a hugely historic day for Europe. But what we mostly have is within the Bloomberg surveillance wheelhouse, which is economic data coming out. And Lisa, I think we've underplayed this on Monday and into this many stories of Tuesday. The economic data begins today and launches towards Jobs Day on Friday. Today's Jolts Tuesday. We're on Tuesday. Good morning. It is Tuesday. But we get the Jolts job openings at 10 a.m. And you're right. To me, this is beginning to be really important. How long can the market shrug off data that is coming in hotter than expected across the board, and that still is really positive with respect to how tight this labor market is? Tom, to me, this is really the big question. Are markets getting it wrong? They've been badly wrong before, and the Fed has been right. Is this just another example of that? And the big question is, I got to get to Lisa's brief because that's smarter than what I'm doing. Let me do a data check here very quickly. Green on the screen, a resilient market yesterday, given news flow. Futures up 12. 41.65. I can't believe I'm saying this. Am I on the 4,200 watch on John Ferro's Standard & Poor's 500 index? Dow getting near 34,000. NASDAQ 100 up. I believe my eyes are failing me. Up 0.5% as well. The VIX, as was mentioned by Matt Miller earlier, in under 19, 18.64. We mentioned the 2-year yield again under 4%. Under 3.5%. The 10-year yield, I missed that. 3.44%. Oil, the big story yesterday, rounded up $85 on Brent crude, getting near $86 a barrel. With a Washington brief, Lisa Abramowicz. As we were just talking about, the economic data really front and center at 10 a.m. We get that February JOLTS job openings data. The expectation is for it to come in still above 10 million job openings, so still nearly 2 openings for every unemployed American. Hard to square this with the idea of an economy on the brink of recession. We also get U.S. factory orders and durable goods orders. I do want to note we're also getting a series of investor days, not only Credit Suisse, which we'll get to, but Walmart is also holding its first in-person investor day since 2020. economy that starts at 8. This almost is as important as the economic data because we might get more of a sense of layoffs and what the macroeconomic situation really is. At 2:15 p.m., President Trump, or the former President Trump, is getting arraigned in the criminal case in Manhattan with District Attorney Alvin Bragg. New York City plans to close off a number of streets. Honestly, my big question is, when does this move beyond the circus into something with much broader implications, or is this going to be very much the circus with all of the cameras coming into the courtroom, at least initially, as allowed by the judge? And today we do get Fed speak, including Boston Fed President Susan Collins, Fed Governor Lisa Cook, Cleveland Fed President Loretta Mester. Markets aren't listening to them, so it'll be really curious to see whether that continues. I'm also speaking with World Bank President David Malpass later this morning at an Atlantic Council event, kicking off next week's meetings. IMF, we're going to be down here, Tom, as well as the World Bank, setting a tone globally for a period that perhaps looks a bit different than some of the strength people are talking about in the U.S.
And as Walmart has a meeting today, it's really the symbol. And to me, the World Bank IMF meetings today really indicate moving beyond the pandemic. It's as simple as the buzz, Lisa, that I feel about what we'll see this week and next week in Washington.
We've been so concerned with former President Trump and all sorts of other smaller plot lines that some of the larger questions about China and what's happened there, some of the larger questions about Russia and its role in the crude market that we've been talking about over the past couple of days, very much front and center for both the IMF and the World Bank.
Right now, we are going to launch into an analysis of this market into the second quarter with all the different ups and downs, your failures, your successes in that tumultuous first quarter with Stephen Chivarone. Steve Chivarone has had a multi-asset solutions at Federated Hermes. Steve, what's changed in your market outlook from 12/31 to 3/31?
Not a ton. We remain cautious. I think what we've seen and what's emerged is the link between rate hikes and a slower economy. And it's the banks. It's the banks, and it's the banks linked to small businesses. With the pressure that's on deposits, we expect, and I think the Fed is looking for this as well, which is one of the reasons why you saw the caution at their last meeting, that's going to lead to a pullback in lending. And that really impacts small businesses, which employ 46% of the U.S. labor force. And it also is likely to impact the consumer as we go through the year, because the consumer really has used credit cards to offset some of the negative real income growth coming from inflation. And we think if that credit's pulled back, that's where you start to see the economy slow further.
In equities, then, where do you hide?
Yeah, so it's a nuanced view. One, defensive dividend-paying stocks, especially after the fact that they've underperformed so far this year. We think that makes them altogether more attractive. But what I think has changed is, whereas coming into the year, we thought cyclicals were a little bit better bet than growth stocks, if you're headed towards a more significant economic slowdown, that safety, the strong balance sheets from some of the larger tech companies, becomes a better place to hide. And so moving from kind of an underweight more towards a neutral weight in growth, we think will be appropriate, not necessarily at these prices. I'd like to see a little bit of a pullback in those growth stocks in order to do that. But we think that's going to be one of the next big trades for stocks.
Steve, you've been cautious for a while, along with a number of other people. How difficult is it to remain cautious as stocks continue to rally?
Yeah, I don't think what's happening here, Lisa, is all that out of the ordinary. I think we just misremember. So, for example, on average, between the low in the unemployment rate and the start of a recession, it takes 6 months. Well, we just hit the low in the unemployment rate a month and a half ago. We're not outside the historical norms. Over that 6-month period, unemployment doesn't rise that much, only about 0.2%. That's about what we're up. If you look at from the low in unemployment claims, that usually takes about 13 months or so to go from the low in unemployment claims for the start of a recession. Well, we're exactly at 13 months today. So I think what happens is people look back at prior cycles, and when you look at them on a chart, it's 2 inches. When you live through it, you realize it's 6, 9, 12 months sometimes. Same thing with bank failures, right? If you looked at the 08, 09 scenario, there were 6 months between Bear and Lehman. We don't remember it that way, but that was the case. And so I think things are progressing in a relatively normal period. If you look at this cycle, there was a recession. There was a robust fiscal and monetary response. It sparked inflation. The Fed's hiking. It's impairing lending. It's kind of proceeding along what might be the most classic cycle we've seen in our lifetimes, actually. Just it takes time.
JP Morgan Asset Management, Bob Michael, he came out and he said, listen, Right now, this is like spring cleaning. We want to get rid of everything we don't want. Perhaps there's going to be another quarter of rally. Perhaps you're going to see risk assets do really well in this second quarter. But after that, game over, and we want to make sure that we don't end up with stuff that we don't like. Do you agree? Do you look at this similarly as a time to kind of clean out specific names that you're not that interested in?
No, I think that's sound advice. In this battle between the market and the Fed, I think what the market's looking at, if you take a step back for a second, right? When was the last time you had a Fed that was hiking in an environment where you had an ISM at 46, when you had the entire yield curve trading below the federal funds rate, when you had this many yield curve measures inverted, when LEIs have been this negative, and when you have banking stress? The answer is never. Just like they were in unprecedented waters in not hiking in 21, they're really in unprecedented waters for not easing right now. Now, they can't because of the prior policy error. So when you look at that, I think being cautious and doing some spring cleaning probably makes some good sense.
Steve Chiavarone, thank you so much. Greatly appreciated today with Federated Hermes there with a reset on 2023. Lisa, I think this is fascinating. We make jokes about John. John's out on his roadshow, folks, with his March 31 outlook for the next 9 months. But I find it fascinating, Lisa, to go back to literally Investment Principles 101. We're in 5th grade. We don't know what we're talking about, sort of like surveillance every day. And it's real simple. Economy seems to be worse in the last 2 days, Lisa, and stocks go up. And I think that's just like a core concept that has to be addressed.
There are some people who say it's like weather forecasting, and there are people, when you hear that a hurricane is coming and yet the sun is still shining, that go out and stock up on canned goods. And then there are other people, the stock traders, who look around and say it's still sunny and there's a good chance that it could miss us, so you might as well enjoy the weather. And there's a sense that things are still good, and if you look on the ground, there is a lot of strength. So how do you parse the now with the predicted future that hasn't come to pass and that's been wrong for a while?
Talisa, in meetings in Washington with the World Bank and the International Monetary Fund, dollar weaker today, decisively weaker, Lisa, off of euro stronger. A lot of research writing this morning whether the euro through a 110, a stronger euro, a real mystery.
I would agree. That's actually something that's continued. But also we're hearing from ECB officials, they're still wanting to hike rates by 50 basis points, even as people price the Fed out.
Please stay with us. There are so many stories on this Tuesday. We'll have them all for you. Barbara Reinhardt with Voya next. This is Bloomberg. Good morning.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. There's never been a day like this in Manhattan. Former President Trump is in town to surrender to law enforcement officers, be booked, hear the charges against him, and enter his plea not guilty. The case involves hush money payments to a porn star during the 2016 campaign. New York City authorities say they're prepared for any disturbances. Oil has extended its rally following that surprise production cut by OPEC+. West Texas Intermediate was up after rising by more than 6% on Monday. The cartel's cutback prompted many banks to jack up their price forecasts. Federal Reserve Governor Lisa Cook says inflation in the U.S. has started easing, but she warns that price pressures could stay in place due to a tight labor market, the war in Ukraine, and the reopening of China. Cook said it will be important to watch how much more credit tightens in the wake of the bank turmoil. A top official at Switzerland's central bank says Credit Suisse would have gone bankrupt the next trading day if it hadn't been sold to UBS. Swiss National Bank Vice President Martin Schlegel called the merger the best among bad solutions. He says he doesn't see that financial stability in Switzerland is threatened in any way. And French skincare giant L'Oreal has agreed to acquire luxury cosmetics brand Aesop in a deal valued at $2.5 billion. Now, Aesop was founded in Australia and developed a cult global following. At L'Oreal, Aesop joins a cast of luxury brands such as Lancôme and Yves Saint Laurent. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
This is his fondest dream come true. He's on the front pages of every newspaper. He gets to play martyr, and he's really, really good at playing martyr. And yeah, the circus is in town in New York, and this circus is going to persist not for weeks or months, but maybe for the next couple of years. Trump can stretch this out into the election campaign of 2024.
Greg Villiers, he's been of such benefit to us with AGF Investments, just his perspective of linking our economics, our political economy into the political moment. Lisa Abramowicz in Washington. I'm Tom Keene in New York. John Ferro is off today. Really looking forward to getting him back for this busy economic week we have. We've really underplayed, beginning with the JOLT survey today, folks, the economic data we're going to get. And as Lisa and I mentioned earlier, the hallmark data point for you waking up across America, 3.99% on the two-year yield, this off of softer GDP analysis summed by the Atlanta GDP Now statistic from a 3-ish down to under 2%. Right now, to dovetail the many threads of this Tuesday in is the right person. Leslie Vinja-Murray joins us, head of U.S. and America's program at Chatham House. And I really, as you do in your wonderful research note, Leslie, I think we can dovetail this in away from the indictment, the arraignment, and all the rest that America's following into the fragility that Europe feels about this moment in America. We have Finland joining NATO. Folks, in my life, I never thought I would say that. That's how unusual that is. Finland's joining NATO, and there's a lack of European confidence over the future of America's support of Europe, looking from Biden on to whatever we see in the next term, which could be another President Trump. I mean, it's a fragile time for Europe as well.
It is. I mean, there's been tremendous confidence that Europe has had in the United States on the back of the invasion, for well over a year now. But lurking in the background is, what comes next in the United States. I think Europe hasn't really taken concrete steps to deal with this. But if, as you're sitting in the corridors of power everywhere, I think in Europe, across Europe, there is a real concern whether Donald Trump is coming back, whether the Trump wing of the party is coming back. And that matters for Europe because it's taken as a sign that Europe won't be as committed to NATO that the United States wouldn't be as committed to NATO if that were to pass. And we all know that it's really U.S. Military support that has saved the day when it comes to the war. So I think for Europeans, it's a very real concern when they look back. They don't really understand the focus of what's happening today necessarily. They don't understand the significance. I think for Europeans, it's much more about, the Capitol attacks, the attempt to obstruct the election. But there is an existential question. What comes next in the United States? It matters for Europe a huge amount.
Well, give us an example of what a second-term President Trump would do in Europe. I mean, what does he do with Poland or Estonia, the new Finland? I mean, what's something that he would adjust or amend from what President Biden's been doing?
Well, I think for the Europeans, the real concern is that Donald Trump would go back to that sort of language and rhetoric that he used throughout his presidency, which is why are we doing this? Why do we care?
Not the language and the rhetoric. We know the president is fine. We may see language and rhetoric today, folks. Kriti Gupta is downtown at Center Street. Okay, fine. We may see language and rhetoric. But what would be the action of a second-term Donald Trump?
Yeah, well, this is the big question, Tom. Nobody knows, but what the real concern is that the action is that you don't get that military aid, that the United States really does pivot, focus most of its attention on China, puts much more pressure on Europeans to support its policy, that comes at a price. And that support, remember, for Europe, this war is existential. That border is right there. It's regardless of what happens in the months ahead, there's going to be instability. The perceived need for the United States to be right there firmly behind is concrete. And they look back at a Republican Party that's saying all sorts of things about what they would or wouldn't do, about whether or not the war is worth America's interest. And the real fear is that Donald Trump would actually consider scaling back that support and potentially pulling the United States out of NATO. It seems very difficult to imagine given the last year and a bit. But it's certainly the concern. And there's no reason not to have that concern given the mixed messages that are coming out of the Republican Party.
Leslie, have there been policy consequences of this? Basically, this idea that the rest of the world is moving away from U.S. leadership in concrete ways amid the crises of whether we're talking about Russia's invasion of Ukraine or other potential risks looming out there?
I think we've got a frozen mic there right now. We'll try to get the technological worked out here in a moment. You know, I look, Leslie, at where we are and what we're going to see today from Trump, and let's bring it back to what we're going to actually envision today. You've been a student of domestic politics for years, and you're in my lifetime. This is original.
It is original. We've never seen an American president indicted in this way. I think the real question is, nobody knows what's in that indictment. We'll have to wait and see. And how will the public react? Right now, it seems like many Americans feel like this is that there's an element of politics. We know this is in a very polarized context that this is taking place. Europeans are looking back. They are struck time and again at the divisions. And in many ways, the interesting question is, how does this play in the court of public opinion? How do people react to whatever comes out today? What significance does it have? Does it become a real thing? Or is there violence on the streets? Or does it sort of fade into the background because people are growing tired of this kind of politics in the United States?
Well, the politics is there and the rhetoric is there. What I find fascinating is both sides establishing a middle. Joe Biden seems to be working against a liberal Democratic Party. There's this, there's that. It's literally choreographed out of the White House. And then you've got the basic Republican response, which is the 46th governor of Arkansas with a 1% polling rating, has decided to jump into the presidential race. Where's the center?
Really hard to find the center. This is the problem when you see that sort of the Democratic Party, as you just said, kind of pulling apart. But again, if you look at this from the perspective of the rest of the world, America's foreign policy at the moment looks pretty bipartisan on the big issues. And Tom, that's not necessarily a good thing for much of the rest of the world. There's a real concern that division between the United States and China is going to put many countries in a position where they have to choose, or it's going to force hard economic choices. So bipartisanship, we might applaud it at home. It doesn't always look like a good thing from the point of view of the rest of the world.
I got to pull an audible question here. I get to do this because I've been doing it for so long. What did you think of the King of England walking across to the Brandenburg Gate the other day? Wow.
An extraordinary moment, of course. I mean, this is symbolic politics, I think, in the current moment are not to be underestimated. We're seeing them time and time again. We're seeing a West that looks so strong in many ways. But again, as you look forward to the months ahead, I think there's a real concern of what comes next. And one has to be cautiously optimistic about the optics about the West, but also aware that the fissures are likely to develop.
We look forward to seeing you in London again. Leslie Vinjamuri with us with the London-based Chatham House this morning, and it really indicates the threads that are out there. It's amazing, Lisa. I can't recall a day in recent memory where there's so many economic, financial, and international relations threads as this Tuesday.
It's a soup. We've been talking about this all for the past, we should say, month. But here's the question that I have. How much can we focus on economic data that continues to be strong and look past it? Because that's what markets are doing, and that's the tension there. When it comes to the geopolitics, it's a slower moving train, but it's just as important. And I do wonder what this does just generally to the balance of power globally with the U.S.
The balance of power for us is always in the economic data. We'll look for that at 8:30 this morning. Really moving on to the jobs day on Friday. Futures up 12. The VIX under 19, extraordinary, 18.61, and that two-year yield under 4%. Brent crude rounded up $86 a barrel. From Washington, from New York, this is Bloomberg Surveillance. Bloomberg Surveillance. Good morning, everyone. Jonathan Ferro, Lisa Abramowicz, and Tom Keene. Mr. Ferro is off today. Lisa Abramowicz in Washington. An important conversation with the World Bank to begin our coverage of World Bank IMF meetings. Many different threads today. Lisa, do we need an additional thread? I think we need an additional thread, and it's not the Mets losing 10-0. It's Mr. Diamond at some point this morning is going to be out with his annual letter. Lisa, I have to admit this deserves explanation. It's always a big deal because I think last year it was 56 pages.
Well, so we're getting some initial reporting on what is in that letter. And what's interesting is his response to the Silicon Valley Bank collapse, basically saying, hey, Fed, you were asleep at the wheel, hiding in plain sight. There it was. You didn't do anything. This isn't about big banks not being responsible. This is about one issue and your failure to oversee it. And he is pretty heated in some of his language.
It's an original letter. The only one I can think of equivalent is the legendary Robert Wilmers at M&T Bank in Buffalo, but that was nothing compared to the scope and scale of this effort. We'll keep you abreast of this as we go through the morning. With all the threads we have today, with the economic data coming up, the jobs report on Friday, futures up 14, a nice lift to the market. NASDAQ 100 up 0.5 percentage point. And I thought some real resilience yesterday, Lisa, in the equity market. We've got a 3.99 in the 2-year, under 3.5% in the 10-year yield gets my attention. The real yield continues to compress down a stunning 1.14%. I can't say what a real yield under 1% would signal. And dollar weakness today with stronger euro, DXY, a 101 handle on DXY. That gets my attention. Weaker dollar this morning. Lisa?
Well, that 109.27, to me, that's actually fascinating. And George Saravelos over at Deutsche Bank came out talking about this. Just to give you a sense, that's close to the highest level that we've seen going back to April of 2022. And he basically said updated labor cost data for the Eurozone show that wages are now growing at a hotter rate than the U.S. in Europe for the first time in more than a decade. So, Tom, if you put that into perspective, this policy divergence that you're seeing on both sides of the Atlantic, people say has staying power.
It does. There's no question about that. Again, futures up 13. Lisa?
So looking ahead, we're going to get non-farm payrolls on Friday. But as you've been saying, we also get JOLTS data, the job openings, with more than 10 million openings expected. Rubila Faruqi of High Frequency Economics calling for a, quote, strong rise in payrolls and a lower unemployment rate, writing, quote, while the risk of recession is potentially higher from recent banking sector stresses, we are still not forecasting an economic contraction in 2023, despite aggressive monetary policy tightening. A real divergence between economists and the market. Rubila Faruqi, chief U.S. economist at High Frequency Economics, joining us right now. Rubila, what do you make of the fact that markets are wholesale rejecting your call for ongoing strength and no recession this year?
Good morning. Thank you for having me. That's been the disconnect. We've talked about this before, too. It's just that the markets are not believing what the Fed is saying. The markets are also saying that the data are backward looking and that the effects, cumulative lagged effects of monetary policy are going to start appearing in the data. But I think the disconnect is also that, are we looking for an economic slowdown or are we looking for a recession? And right now, given where the labor market is, given what we're seeing in terms of resilience in the household sector, we're just not seeing that. So we expect a slowdown, pretty substantial slowdown, but we are not expecting an outright contraction. We also have to remember that we have been expecting this slowdown, from the second half of 2022, and that has not materialized. This economy has a lot of positive momentum. So despite, aggressive Fed tightening, we have seen a household sector that has remained resilient because the labor market has been so strong. And there's no indication yet that that is going to change. We do think things are going to slow down. We have been expecting that for a while. But if you look at the weekly data, the timely data, in terms of the jobless claims numbers, in terms of, what the JOLTS data are showing us, there's really no indication that we're about to see a collapse in either the labor market, either the household sector or the economy.
How does the ISM manufacturing data from yesterday, Rubila, really fit into this, given that it was the lowest going back to the height of the pandemic and that typically that precedes a recession?
Right. And, if you look at the levels of where the manufacturing ISM is, it is still above levels that are consistent with the recession. It's really in the low 40s when you see a manufacturing recession. You also have to consider the fact that we are seeing a response from the super interest sensitive sectors of the economy. We're seeing housing contract. We're seeing the effect on manufacturing. But, we are just less than 5 points below that neutral 50 level in the manufacturing ISM. We think manufacturing is going to remain under pressure. We do think that there could be some support if you look at, the infrastructure program plans, or if you look at an onshoring of, supply chains. But on the other side of it, you've got higher borrowing costs, and now you've got a possible credit crunch. We're not expecting a credit crunch, but at least tighter credit conditions that are going to affect businesses' decisions around, those investment projects or those hiring decisions. So I do think that this is really, I don't see it broad-based. I think it's limited. I don't think it's a signal for the broader economy, but it is something that we're watching very carefully.
So you think right now, Rubila, the market's wrong?
The market is in complete conflict with what the data are showing. But and that has happened before, and the markets have adjusted. But I think there's so much uncertainty right now about the economic outlook. Like I said, we've been expecting a slowdown. We don't think it's going to be a contraction, outright contraction. But there are elevated uncertainties. The Fed has delivered a lot, and we are waiting to see what happens, in terms of credit. We're looking at the loan activity data. We're also waiting to see what happens in the Senior Loan Officer Opinion Survey when the next one comes out in early May. And those are the things where the uncertainty lies. We're not really sure how much of an impact it's going to have on businesses, particularly small businesses. That's where a lot of the job openings are. Are businesses going to stop hiring? Are they going to, start firing? That's where, and that really has, significant implications for households and spending and the economy.
Rubila, I want to channel in here Carl Weinberg, your colleague at High Frequency Economics, who's deeply experienced on the fragility of emerging market economies, emerging market crises. I've got blue dollar, the black market peso in Argentina out to a 407. I've got Turkish lira walking away. I get it. It's idiosyncratic. Fold in Carl's world-class view of EM into your view of the U.S. economy and as of Jerome Powell as central banker to the world.
I mean, this is where the challenge lies, right? I mean, the Fed's mandate is very focused on the U.S. economy, right? I mean, this is their job, number one, inflation and employment. But it does, I mean, Jerome Powell is central banker to the world, so obviously it makes a big difference. It has a big impact globally. But the Fed is in a, we've said this before many, many times, the Fed's in a very tight spot. They're going to do what's good for the U.S. economy. What's good for the U.S. economy right now is that they move a little bit more and they stay there for a while. And, but obviously, geopolitical events, global economic events, that, if there is a lot of disruption, that will play into their decisions. But the focus really is on U.S. inflation and the U.S. labor market.
If there's that partition right now into the May 3rd meeting, do you have clarity? Or does High Frequency Economics just have such an uncertain view where you are as data dependent as the Fed officers are?
We are as data dependent as the Fed is. We do think that they have the room to go another 25 basis points. But, what we read in the statement was a very cautious tone. They are thinking about tighter credit conditions substituting for rate hikes. We know that the Fed is close to the end of the rate hiking cycle. This was something that they communicated even before. This is something that, the banking sector turmoil has probably accelerated that, in that they might actually pause at the May meeting, depending on what happens. That's not our base case. We think they move 25 basis points. The real question is what happens afterwards. And I think that they are going to keep rates higher for longer. And that's where the conflict is. So
there's no rate cut. What does the market do when they figure out there's no rate cuts?
We've seen this story before. I think markets will eventually capitulate unless, we are talking about, a situation where recession is all but guaranteed. Like I said, we just don't see it right now. But based on our outlook, currently, we don't think that, the market pricing in terms of rate cuts, I think that just has to be repriced very aggressively and very soon.
Rubila Faruqi, thank you so much with High Frequency Economics this morning. It is annual, folks. It is in April. No, Lisa and I are doing our taxes. Does Ferro do taxes, Lisa, or does he do them in the United Kingdom? I don't even know if he has a torture we have.
You know, I'm not going to talk about John's personal life, but he has been living in New York for quite a long time. So I believe he plays by the same rules that we all do.
In April as well,
anyway,
we look at an annual report. Why we are proud of J.P. Morgan Chase. Mr. Diamond releases a report. I've skimmed through the first 4 or 5 pages. There's a few pages after that, Lisa. And it's a really interesting initial read of his shareholder letter. I would begin with one statistic. He says the government is his partner as he speaks, silent partner as he alludes to his friend Warren Buffett. And Lisa, he notes they've paid $43 billion in United States taxes over the last 10 years. A bit defensive.
How much is this basically a rebuttal to the proposal to assess this levy on the biggest banks to pay for the FDIC's expenses with respect to Silicon Valley Bank? How much is this directly saying we're safe? We've been safeguarding and raising capital for all of our clients. We're safer than we've ever been before. There are no issues here. This is your failure, and now you're going to come after us. After all of the taxes we've paid, after everything that we've done for the economy, how much of that defensiveness, Tom, do you feel underpinning some of these comments?
I've got to be honest. Is it a PR exercise? Yes, of course it's managed by all the officers of J.P. Morgan, and I'd like to thank all of our guests, including David Kelly with us yesterday, I believe it was, is involved in its form. But you get the messaging out front, which I think has huge influence, Lisa, looking at service, heart, curiosity, courage, excellence. Those are the kind of themes I think we'll see in all the annual reports this year.
Yeah, the other theme that I'm very curious to see elaborated on, and everyone's kind of gingerly touching this, is China and how some of the bigger banks are going to address the divide and the growing kind of tensions between the U.S. and China. At what point do the rising tensions impede on their business in some capacity? Do they start kind of raising some questions about how much they want to double down there?
We will see. We'll continue to dive into this letter. We don't see it ahead of time, folks. It's not embargoed or anything like that. We'll dive into it on this break and come back to you with always an important note for American Wall Street. Futures advance. Lisa Abramowicz driving the S&P higher from a plus 12 up to plus 18 on the Standard & Poor's 500. On bonds, Greg Peters next.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. The New York City Police Department, U.S. Secret Service, and other authorities are on high alert as Donald Trump is set to be arraigned this afternoon in Lower Manhattan. The former president's indictment has sparked a political firestorm as he makes a comeback bid for the White House. Trump's lawyers say he will plead not guilty. The case involves hush money payments made to a porn star during the 2016 campaign. Russia has taken over the rotating presidency of the United Nations Security Council. Its ambassador made it clear that it will use the opportunity to promote its defense of the war in Ukraine. The U.S. ambassador to the UN, Linda Thompson-Greenfield, called the matter an April Fool's joke and said Russia will use a chance to spread disinformation. In California, relentless winter storms have left behind one of the state's biggest snowpacks on record. Officials say its water content measures 237% of normal. Now, that's good news for California, which has been suffering through a drought. But there's also concern that the warmer weather could lead to flooding in the state's Central Valley. Bloomberg's learned that Warner Brothers Discovery is close to a deal for an online TV series based on the best-selling Harry Potter young adult books. Now, each season of the series would be based on one of J.K. Rowling's bestsellers. Warner Brothers previously turned each of the books into a hit movie. And in sports, the University of Connecticut has won its 5th NCAA men's basketball title. The Huskies beat San Diego State 76-59 in Monday night's final in Houston. UConn's Adama Sanogo finished with 17 points and 10 rebounds and was named the tournament's most outstanding player. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
If things are better, if we've actually seen an environment where this banking crisis issue is stabilizing and we're seeing a Fed that's stepping back a little bit, then we're going to see a situation of inflation tolerance.
Catherine Kaminsky, always good on trend-based following. What a bang-up year they had at Alpha Simplex. And a challenging first quarter, she mentioned to us yesterday. Always good and candid comments. Our comments are futures up 16, Dow futures up 77. The Dow, yesterday, I put this out on Twitter, folks. John Farrow's right. The Dow can do flaky things because of the way it was structured. It was up big yesterday, Lisa. And,
whoa.
You know, it was
Who
like,
are you?
No, it was another day where, you know, because it's whatever it is weighted, I never get the language right, but it was goofy yesterday, to say the least. 4% in the 2-year yield. We've noted the dollar with some new weakness there. Mexican peso back to 18. And that's about it. I guess Brent crude rounded up $86 a barrel has my attention. Lisa?
I would agree with that. I think that, honestly, crude, the fact that you're seeing some of the short sellers stopped out of their positions and volatility going down in the oil patch, even as prices rise, definitely catching people's notice. Also catching people's notice is a mea culpa over in Credit Suisse with the chair addressing the 15,000 large ice hockey rink in Zurich. Credit Suisse holding their first annual shareholder meeting in person in Zurich since the pandemic, just weeks after the historic takeover by UBS. Credit Suisse chair Axel Lehmann opening the meeting saying he was, quote, truly sorry for failing to stem the crisis, adding, quote, we failed to stem the impact of legacy scandals and counter negative headlines with positive facts. The bank could not be saved. Marcus Ashworth in our London office of Bloomberg Opinion joining us now. And Marcus, what did you make of a statement that really was basically saying we got nothing?
Well, I think the only thing we were missing was the sort of 90-degree horizontal bow you might get from a Japanese bank leader. But, you know, I think this is a bit CYA in the sense they're covering themselves. Everyone seems to be making out that this was truly terrible and they had no other option and they did the only thing they could possibly do to save the world. I'm going to say slightly cynical on that, but nonetheless, it is what it is. I don't think they went about handling bondholders' rights in a correct fashion. And I think they've been called out from that around the world. Nonetheless, look, they did what had to be done, and now comes the culling of Credit Suisse. A lot of this could have been done if they'd followed the UBS model 10 or 12 years ago. And that's exactly what UBS is going to look what they did then, and they're going to do it again.
What did you make of the Swiss National Bank statement saying that Credit Suisse couldn't have lasted another day without filing for bankruptcy? And, oh, by the way, no, this combined entity will not be a government-backed bank.
Convenient is the first word that springs to mind. What else do we expect them to say? They're all reading off the same song sheet, and we can expect that. And I'm sure they'll do a very rigorous probe of everything. I'm sure it'll find every little nook and cranny that everything was done as it happens perfectly correctly.
Marcus, I had the great privilege yesterday of talking to a senior Credit Suisse manager in the United States. And of course, he was shell-shocked, extremely tentative about not only the days ahead, but the hours ahead as well. Let us be clear here. Is Credit Suisse an entity at this time? I thought the annual report meeting was bordering on a Hollywood comedy almost in its surrealness. Are they an entity right now?
I guess they are as such, and I think it would be a mistake for UBS to completely, de-entity-ize them in the sense of wipe them off the map. I mean, there will over a point come, I used to work at Swiss Bank, SBC, which became obviously UBS, all but name, and I think that was perhaps a mistake. But nonetheless, Credit Suisse, does mean something and still means something for certain people, clearly on the private wealth management side. UBS is as good, if not a better name, or probably always was. But, as an entity, Credit Suisse was more dynamic in lots of ways. And I think UBS would make a mistake if they completely wipe out everything. I mean, a lot has to go. The culture was clearly wrong. But nonetheless, this was a long-term, highly successful, storied bank. And I think 167 years or whatever, I think just to have one big UBS, doesn't necessarily reflect everything it should do.
It's Tuesday, Marcus, and a completely unfair question. Where is this entity come Monday? A week from now, 6 days from now, what should we expect to see?
Well, I think they're going to have to obviously take a big axe to a lot of the Credit Suisse side. I think that'll play out over quite some months. It's interesting today we have a bank, BNP, issuing a senior non-preferred debt. So what we're going to see here, I think, is that the banking system and debt issuance and getting back to a bit more normality, which will enable UBS and Credit Suisse, whatever they decide to do, things in a little bit more calm and quiet. And so I expect we'll start to see hopefully some sensible business decisions coming out of the merger. Did I say merger?
Yeah, exactly. Despite the big name that is Credit Suisse and the legendary status in global markets over the past more than a century, other than that, is the European market, with some respects, a lot stronger than the U.S. is and feeling more optimistic on pretty positive data, in particular having to do with wages?
Wow, that's a question. Look, I just think the European market is different. They've gone through... I was going to say they didn't clear out a lot of the balance sheets in any way like the sense the US did. I think the US model where it's fallen down is that they've got this sort of two-tier regulation, which clearly is going to have to change, where the smaller banks have seemed to have gone under the radar screen. There's a much bigger problem in European banking. It's a much bigger area. It's got, 20-plus different countries, all with different regulations. The ECB has done as best as it can, but it is fighting a huge battle to try and get everything sort of making sense. They have the bail-in elements, which have worked in mixed ways, so I don't think that we can honestly say that the European banking system is completely safe and sound. But in this particular instance, it's got more powers, perhaps, and it's used them aggressively.
Marcus, go on and write your annual report letter so we can go into that here in a couple of weeks. Marcus Ashworth, in charge of the annual report letter of Queen Victoria Street in London. Thank you so much this morning. Lisa, above Mr. Diamond's signature on April 4, 2023, a final sentence, and see a renaissance of a world on the path to peace and democracy. I'm really quite taken with the theme this year, Lisa, here. And of course, this is with the war in Ukraine. The back third of the letter, including a complete op-ed from the Wall Street Journal that Mr. Diamond wrote a while back, is remarkably on a greater global view and on the word democracy. Some of the foundations, Lisa, that we'll hear from Richard Haas in the 8 o'clock hour this morning, it's a primal scream for a reaffirmation of a 21st century American government.
How do you have a 21st century business that operates globally with a feeling of fragmentation that's just accelerating, with the idea of polarities that are kind of established between U.S. and Europe, and then China and Russia, and potentially some of the other nations in the rest of the world? So these are some of the questions that banks are dealing with as they try to operate on a global scale, Tom. It's not going to be easy. I mean, that to me is the issue.
And to give people a memory here, the 12-month return of J.P. Morgan is a sprightly 13.4% per year here. That's on a decade return, I should say, 13.4% per year. He does mention the financials up top, obviously of concern to the Bloomberg surveillance audience, but there's a real different tone here in time of war.
Well, to me, I want to pick up on some of the banking-related points, because to me, this really screams, you guys should not overreact and penalize us for your failure with Silicon Valley Bank. That's how I take this in terms of what Jamie Dimon messages to politicians. The idea here, the current crisis is not yet over. And even when it is behind us, there will be repercussions from it. But importantly, recent events are nothing like what occurred during 2008. He also said it's important that we avoid knee-jerk, whack-a-mole types of regulatory responses to this. So again, Tom, how much are we looking at a Jamie Dimon who is defiant, saying we were the strong ones, don't fine us, don't levy us anything, and don't overregulate us on the heels of what you guys missed?
And what's so important here is a direct statement days after this banking crisis. Some would say we're still amid this banking crisis, where he mentions, he singles out SVB, not some of the other smaller banks, and says, look, we are different, we are stronger. So we'll continue to dive into that annual letter, always a statement here as well. We do so, and Lisa, I just don't think we've mentioned this enough over the last number of days. This stock market refuses to go down. That's all there is to it.
They're looking at positive data, and they're looking at earnings that are still okay. So at what point will they wake up to evidently what the bond market's looking at?
We'll have to see. Barbara Reinhardt, she was wonderful the last time she was on with Voya Investment Management. Really looking forward to that. That 2-year yield, 3.99%. 10-year, 3.45%. Stay with us. From Washington, from New York, this is Bloomberg Surveillance.
The OPEC decision is more like a catalyst on top of something that's already moving the other direction.
If I were in the Federal Reserve's position here, I would not look at higher oil prices as a reason to get tighter.
These crises just push us off kilter and make it very difficult to get back to where we need to.
The markets are saying real interest rates are going to be positive at a significant level for the next decade.
I think the market is telling you that investors are starting to exhale a bit, even if they're not breathing easy just yet.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowicz, and Tom Keene on an amazing historic Tuesday. There are so many different stories this morning. Lisa Abramowicz in Washington. I am in New York. John Ferro is out today. Lisa, you're down there with David Malpass as he exits the World Bank. We begin our coverage of World Bank, IMF, and there's an international component to this idea of American slowdown, American lower interest rates.
Well, we're asking the question, what does the rest of the world look like when you withdraw the zero rate policies, the sort of free money era? We talk about it ad nauseum, about the U.S. and about Europe. But what about the developing nations that have gotten money off the backs of this, that now have to deal with a very different backdrop? And that, I think, is what David Malpass is focused on.
Oil yesterday, the major story. I'm going to fold the data check right in here this morning because we've got a wonderful guest, particularly for those of you that missed this out of October bull market. This guest coming up is critical. Lisa, I'm sorry. I can say oil advances $84, $85, $86 on Brent crude.
I was looking at RBC's Michael Tran's note. He was talking about how they have changed their view on oil twice in 2 weeks, and it gives you a sense of how quickly the facts are changing. This is a surprise, more than 1 million barrel a day cut by OPEC Plus, coming on the heels of perhaps weakness that they're seeing in the market. But Tom, what I find interesting, especially the read through today, this is a new dynamic. People saying that they want prices higher and they're going to get them, and that no, it's not just because the economy is slowing so much. To me, that's really interesting. Also interesting, Tom, did you see Joe Biden's response? He basically was saying, you know what, this time is different than before. It has a different nature. It's in response to demand, which suggests they're not going to do a tit for tat there with going back and forth with OPEC Plus.
They'll have to do a tit for tat on the U.S. economy breaking down. Clear. We played the headline in the last hour, folks, on radio, the Atlanta GDP number, Lisa, moving from 3.7 down under 2%. To me, that was the germane headline of yesterday.
Well, and this sort of feeds into what you're seeing in the bond market. Tom, you talked about the 2-year yield at the start of the show, and you are right to do so. Consistently, we are pricing in rate cuts through the end of this year. We're looking at the potential for possibly even lower long-term yields at a time when the economy hasn't turned yet. Try to make sense of that. I think the equities are looking at the good and bonds are looking at the bad.
We'll do this right now. Let me do the data check here. Lisa's got an important morning brief. The number of threads today, folks, I can't begin. The way we've diffused out the Bloomberg surveillance team. Kriti Gupta, downtown lower Manhattan. Maria Tadeo in Brussels with Finland and NATO. Lisa in Washington. John's doing something for us today. I'm not sure what it is. It's extraordinary, the threads of Tuesday. And that thread is optimism in the equity markets. Futures up 14. The VIX under 19 is very important. At 3.99 handle on the 2-year yield. Lisa, I'd note weaker dollar as well. Brief us if you can.
Well, right now we're definitely counting down till Friday's jobs report. 10 a.m. we get February JOLTS job openings data. The expectation is that we're going to continue to get more than 10 million job openings, which is nearly 2 openings per each unemployed American. Try to square that with calls for recession. It is difficult. Also, in the economic bucket, Walmart is holding its first in-person shareholder meeting today. And I actually am really interested, and this is the first since 2020, since the pandemic set in, with respect to economic prognostications, given that they are very much on the ground and very much exposed to some of the more inflation-sensitive sectors of the economy. 2:15 p.m., the former President Trump is getting arraigned in Manhattan. Manhattan District Attorney Alvin Bragg is going to unveil the indictment against him. We're going to hear all sorts of messaging from that. I am interested in that more from the perspective of what this means for international relations, what this means with respect to the dynamics of the 2024 race. And then today we do get Fed speak. Boston Fed President Susan Collins, Fed Governor Lisa Cook, Cleveland Fed President Loretta Mester. I know you're tracking every single word, Tom, that they say. I also will be speaking with David Malpass of the World Bank. Yeah. I'm curious, ahead of the World Bank and IMF meetings, what they have to say about U.S. and China. I really think this is the underplayed story story, especially given some of the U.S. companies that have pretty big businesses in China.
Help me on a quiet Tuesday. Is there an auction today, Lisa?
Not that's going to really rise to the occasion. There's plenty of other types of events that we're going to be watching, including the Credit Suisse shareholder meeting that's ongoing in Zurich. There are a whole host of things. We're not looking for peripheral data points.
I'll cut to the chase here, folks. This is the interview of the day if you've missed this bull market. The great Ralph Ancampora came out in October, pounding the table, saying technically October was the bottom, and so few participated. Moments ago, Torsten Slack of Apollo codifies it. 20 stocks have been this rally. It's a 20-stock bull market, 460 stocks, SPX, that's John's index, 460 stocks have not participated. She's been a resilient bull. Lean forward and listen to Barbara Reinhard of Voya Investment Management. Are you still bullish after the move off of October?
We are. We're still bullish because we believe that the SVB banking crisis really gave the central banks an opportunity to reassess. They have muscle memory on what a systemic crisis looks like. While the Fed raised rates at its last meeting, we think this gives it an opportunity to slow down some of its hawkishness. We were only talking about 50 basis points hike just a month ago. They only did 25, and you're seeing some relief on inflation.
Jamie Dimon in his letter this morning, and I've just skimmed through it, folks. We're already, I'll go and read the whole thing tonight over a beverage of my choice. Mr. Dimon says maybe with SVB we have some form of, and these are my own words, paradigm shift. How do you shift your equity investment given the shock that we had systemically?
It may seem peculiar, but you know what? The big rally off of the bottom, it was participated on very strongly by the international equity markets. So developed international, Europe, and emerging markets were some of the big gainers off of that bottom of the October low. But what we saw in March, we think is an important shift. The U.S. outperformed the rest of the world, and pretty strongly. So we think that the 700 basis points of the international markets outperformance of the U.S. over the past year is largely behind us, and we think it's going to be the U.S. that's going to be the leader going forward.
Barbara, what data are you looking at that suggests that the U.S. is doing so much better than other nations? And I ask this because George Saravelos over at Deutsche Bank put out a note saying that European wages are outpacing those in the U.S. for the first time in more than a decade.
Right. Well, that's the thing is it gives the opportunity, the slowing inflation scenario that you have in the U.S. gives the central bank the opportunity to slow their rate hikes, even possibly pause at their next meeting. And that means that the U.S. is likely to be one of those first in to fight inflation and one of the first ones also to start pausing and then potentially cutting sometime in the next year. Remember, that first rate pause, when the Fed pauses, there's usually a very big counter-trend rally in equities. You have that also coincidence with very high cash levels at mutual funds and also somewhat depressed sentiment, and it gives a very important kind of push forward for equities, likely onto new highs.
Barbara, I absolutely love how you troll all the bears out there, and successfully, because frankly, you have been right. Basically saying, what's been the biggest pain trade since last October? The answer is being short stocks with long cash. What do you think is going to be the leadership here? Is it going to continue to be tech on the heels of that pause, or is it going to be broad-based? Is this really something more holistic and longer lasting?
Look, for sure, there are parts of the market that are more affected by SVB than others, right? There's going to be a continued tightening of credit conditions that affects U.S. small caps, U.S. mid caps much more than it does large caps. But I would say they've been so beaten down at this point, you're likely to see a broadening out of the equity market, and it's going to broaden out from leadership, not only from U.S. growth, but take some of the other parts of the market, likely the lower cap size, along with it. I think it's difficult to mount a sustainable rally in the early cyclicals at this point. But we do think that it's likely indeed to have a very much bigger, broader base in terms of cap size.
I want to address this from Jamie Dimon's letter released an hour ago. I assume you did not get an advance copy.
No, I did not.
There's a banking numbers. That's a joke, folks. There's a banking numbers as well. And down at the bottom, it was the next Secretary of Treasury talking about policy, diplomacy, and that. And in the middle, he says there are storm clouds ahead because of the shock we had from SVB, deposit flows, and things maybe we don't know right now. How do you stay a bull? How do you stay in the market on a Friday afternoon if Mr. Dimon and you suggest there are storm clouds ahead?
There are always storm clouds ahead, right? You've had this expansion going for quite some time in the U.S. If you count that the COVID reset and the COVID recession that we had wasn't necessarily a classic business cycle contraction. So yes, we're further along in the cycle, but there's always storm clouds ahead. When you have a 500 basis point tightening in rates like you've had from the Fed over the past year, things start to break. We've had things breaking for over a year. However, if you do not believe that a recession is upon us in the next 6 months, and we do not think that there is, equity markets tend to do very well in the year up to a recession.
The raging theme over the weekend, Adam Tooze leading the debate in the FT, is the power of nominal GDP. Does an inflation-juiced nominal GDP mean a surprise in revenue growth for American corporations?
Well, it makes everybody feel better to have faster GDP growth, right? The margin compression story is a real concern, of course, in the U.S., but we do believe that there's enough that the Fed's going to be able to pause, that they've done enough to get inflation under control, and you start to see it. You had a much better core PCE number that was just released. And if you have...
And in South Korea today, we saw disinflation there as well.
Exactly. So it could be a world that's going to be awash in slowing inflation, at least through the second quarter of this year.
What we're going to do here, folks, is through all of 2023, we're going to put Bramo and Reinhardt on the desk together here to have a dueling debate on the tone of our economic polity moving forward. Barbara Reinhardt is with Voya Investment Management. Lisa, I just can't say what a lonely voice that is in Torsten Slok's note of 20 stocks, a 20-stock bull market. I think that really says it all.
Which perhaps is a bit of ammunition for why it could be correct, right? I mean, if basically the market is already stacked for negativity. At the same time, what gives people confidence? What compass are they looking at? You can basically justify any narrative you want choosing the correct data, Tom.
If you're just joining us, it is an extraordinary Tuesday. News in Brussels of Finland and NATO. A former president arraigned later this afternoon in New York. And, of course, the markets. Stay with us. This is Bloomberg.
Keeping you up to date with news from around the world. With the first word, I'm Lisa Mateo. There's never been a day like this in Manhattan. Former President Trump is in town to surrender to law enforcement officers, be booked, hear the charges against him, and enter his plea not guilty. The case involves hush money payments to a porn star during the 2016 campaign. New York City authorities say they're prepared for any disturbances. Oil has extended its rally following that surprise production cut by OPEC+. West Texas Intermediate was up after rising by more than 6% on Monday. The cartel's cutback prompted many banks to jack up their price forecasts. Federal Reserve Governor Lisa Cook says inflation in the U.S. has started easing, but she warns that price pressures could stay in place due to a tight labor market, the war in Ukraine, and the reopening of China. Cook said it will be important to watch how much more credit tightens in the wake of the bank turmoil. Finland is formally becoming the 31st member of NATO. Today's ceremony in Brussels completes a tumultuous process that was sparked by Russia's invasion of Ukraine. Finland's addition will bring the military alliance more than 800 miles from the border with Russia. And Virgin Orbit has filed for bankruptcy. The satellite launch firm tied to billionaire Richard Branson couldn't secure the funding needed to keep operating. Virgin Orbit had a high-profile launch failure in January, and then its stock collapsed. It hadn't turned a profit as a public company. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
While there may be some rabble-rousers thinking about coming to our city tomorrow, our message is clear and simple. Control yourselves. New York City is our home, not a playground for your misplaced anger. While you're in town, be on your best behavior.
The 110th mayor of New York City, and I should point out 22 years of public service to the New York Police Department and other agencies of our law enforcement. Speaking with some authority there, Mayor Adams of a New York gripped by all sorts of geography and tension here, including the landing of an airplane and the driving of a car, and then here and there and everywhere in Manhattan. Lisa Abramowicz is in Washington. I'm Tom Keene in New York. John Ferro is off today. John, getting ready for the jobs report. Futures up 13. They were up more a bit ago, but nevertheless, a constructive lift to the market. Summarizing all this, and particularly for our international audience, this moment for Manhattan, this moment for Mr. Trump, Anne-Marie Horton, our chief indictment correspondent today. The one-way bet here is a former president, quiet, subdued, going through the process, or something more rambunctious. Do you have a bet on that or knowledge of which way he'll go?
I think we already know based on yesterday. This is what many are calling a circus. It almost is reminiscent of O.J. Simpson as the news cameras.
I agree, but will he participate in the circus? That
He
to me
already
is the
is.
question.
If you look at his statements on Truth Social last night, once again going after the Manhattan District Attorney Alvin Bragg, and also lambasting against this individual's wife. So what you've seen in the former president's statements is that he is going to make sure that he is vocal about this indictment and today's arraignment at 2:15 p.m. on Center Street, downtown Manhattan. Then after this, Tom, he's getting on a plane. His Trump Force One is what they like to call it, and he's going to Mar-a-Lago, and he'll be giving a prime time address at 8:15 p.m.
Will the networks carry that? Will it be carried by the broader American media?
I believe so. And not only are the networks carrying it, but I was outside Trump Tower yesterday just to talk to some individuals. And on the west side of Fifth Avenue...
Excuse me, folks. She wandered into Prada as she was
Actually, it's
walking
Gucci that's on the bottom of the Trump Tower.
I didn't know that.
Yeah, that's
continue.
Yeah, I have better New York City geography than you, Tom. But on the west side of Fifth Avenue, it is just nonstop reporters, lenses, camera crews. On the right were some Trump supporters, but the reporters far outweighed those supporters.
You know the geography, and one of the jewels we have in law is Brooklyn Law School. He's lawyering up. The lawyer he picked up today was a guy who went to night school at Brooklyn Law School and has serious prosecutor cred. Explain how the former president is hiring new lawyers.
So this is one individual he's adding to his legal team, Todd Blanche. As you said, he went to Brooklyn Law, but also this individual is really well known for dealing with a lot of high-profile white criminal law, and he represented Trump's former campaign manager, Paul Manafort. So you can see he's staying within the Trump world, but as you called it on Monday when I was here, was that yesterday? He said, it was Friday. He said, is the president going to be lawyering up? And he is. There's one lawyer, though, that has really been aggressive out front in the media, and that's Joe Tacopina. And he has said to a number of journalists across the media landscape that when they arrive at that arraignment, they will plead loudly and proudly not guilty.
Maybe unfair question to you, but I'll go there. I'll take a risk here. The judge is already limiting the media. Still images, I think, folks, before this arraignment. I'm speaking out of turn here. But the answer is the legal people seem to be wanting to constrain the circus, as you call it. Will they be successful?
They already are. So what we do know is that the still photographers, about a handful, will be allowed into the courtroom, but there won't be the cameras, so you can watch this live. There won't be laptops. There won't be mobile phones. They are really trying, and a number of other court cases going on will actually have to go silent for the day, and they are trying to subdue it within the courthouse. But outside is going to be a different story. We already know there's going to be protests.
Lisa, I've got it on good account that Anne-Marie Horton is going to go by a Dwayne Reed. She's going to go by a Kodak point and shoot so she can be one of the still camera people there before the festivities.
I'm sure that's exactly where we'll find Anne-Marie. Anne-Marie, there's this question of whether former President Trump's defending attorneys are going to say that this should be dismissed because of the injustice of trying it altogether, the appearance of undermining justice, basically questioning publicly the motivations of this case. What do we know about whether they are planning to go with this particular provision?
Well, I think the first thing we need to remember is that this indictment is still under seal. So today we're actually going to be able to see all of these charges that they are alleging against the former president. We do know one potential avenue his legal team wants to take is they want to ask that this case be tried in Staten Island instead of Manhattan. And obviously that is because if you look at the former president's support, he won Staten Island. Manhattan largely leans very liberal, very Democratic, and they think it does, Tom. And they think this is a better chance of success. That is likely not going to happen. But while you see the lawyers inside the courtroom, they are going to vehemently defend the former president. I think what you're going to see from the Trump political world is more of making sure they are out front and trying to rally not just their base, but the entire Republican Party, calling this a quote-unquote witch hunt.
That's where I wanted to go with this. What's the Republican response? How united is it in backing the former president?
Well, I think as Rick Davis said it to me, is it's very easy for any Republican to go after a Democratic Manhattan district attorney. So you are seeing the Republican Party come out and say they think these charges are politically motivated. They say as a prosecutor, there's a ton of issues they can decide that, or legal cases they could decide they want to go down that road. And in New York, there's obviously lots of difficulties when it comes to which cases they decide to pick up. So they're calling this political. But at the same time, you do have some Republicans, like the former governor of Arkansas, Governor Hutchinson, saying this is going to be a distraction for the Republican Party. He said that he is going to be announcing and wants to try to have a different leader going into 2024. But it's going to be very difficult, Lisa, for anyone to break through, because what you see across the media spectrum is Trump wall to wall.
Well, that's right. Roy. You read my mind, Anne-Marie. I'm looking here, folks, in our studio, and behind camera 42, there's a wall of the media of America, and frankly, some great feeds worldwide as well. And you're right, it's Trump all the moment. But what I don't see there is the heart of the day's matters, which is 20-plus counts. Do we have a guesstimate or any understanding of what the actual legal document will be in this arraignment?
So what we have from a reporter at Yahoo News last night, which is why you saw the former president take to Truth Social, is that it's 30-plus counts of felonies. But no, we don't. These are unsealed documents. We know that
in a normal grand jury process, it's a mystery.
Yes, by design. What we do know is that this largely has to do with hush money the former president allegedly paid to an adult film star ahead of the campaign election cycle. This, of course, we also know that Michael Cohen went to jail for. This is the ethos of what we could see, but we still have so many more questions than we have answers.
Emery Horton, thank you so much. And just for really 24/7 coverage on this. Kriti Gupta is down on Center Street as well, greeting the early morning. Lisa, I don't even know where to go with all of this. The threads of this Tuesday are just extraordinary. I'm dying, Lisa, just to get back to economic data, the certainty of the JOLTS survey. I mean, it would be that provides me comfort. The land of Mike McKee provides me comfort on that.
The fact that we are focusing once again on the economic data tells you that perhaps people are moving beyond the banking crisis and looking at how the economy is doing. And it is a mystery where people can basically choose your own adventure depending on the data. But we do get that JOLTS data. And I do think it will be really important, Tom.
And the two-year yield is our barometer of the mood on a Tuesday morning, from a 3.98 out to 4.02%, a touch higher yields in the last 20 minutes. Futures up 11. Stay with us. Worldwide, this is Bloomberg Surveillance. Bloomberg Surveillance, good morning to you on radio and television from Washington in New York. An absolutely original Tuesday. Thank you to Anne-Marie Horton for her brief there on all that's going on with an arraignment of a former president. We'll have complete coverage on that through the day and particularly into the afternoon. As Anne-Marie mentioned tonight, the former president will speak from Mar-a-Lago. We have in Brussels this historic moment for Finland and NATO. We have our eye on that. We have economic data as well. And, of course, within the markets, futures up 12, Dow futures up 37. Quietly this morning, there was and Marcus Ashworth, folks, I thought was great on this from London. There was a perfectly set blue, which if you're in the game is a Credit Suisse blue. It's just a certain color, always associated. And it was business as usual. And Lisa, I can say in umpteen years of doing this, including following Credit Suisse and their wonderful intellectual ability over the years, absolutely surreal this morning, and even more so because they move on to UBS tomorrow. That's where you start this morning.
It is the last shareholder meeting in the 167-year history of Credit Suisse this morning, and I'm looking at shares of UBS on the heels of that integration. And just to give you some perspective, those shares are up more than 10%, almost 11%. If you look at the ADRs, the American Depositary Receipts for UBS so far this year, they have been outperforming pretty steadily, and they are up again almost 1.5%, even as we hear of all of the potential frailties at Credit Suisse leading up to this forced acquisition. It is interesting to me that as the dust settles, people view this as a huge win for UBS, even amid some of the question marks around Credit Suisse. I'm also watching ExxonMobil shares because they're up about 0.3%, but continuing gains from yesterday. I think that the move in oil is fascinating, Tom. We have seen this consistently. You know, yesterday, this was a big pop, a 6% gain. We're seeing it again today. You're seeing WTI crude at some of the highest levels since the beginning of the year. How much further does this have to go? And how much does this fly in the face of this theory that we're entering some sort of global recession? Trying to put this together can be a bit mind-spinning. And I'm looking at AMC because these meme stocks can show you easy come, easy go. Those shares were up about 25% so far the year to date. Now they're down more than 27% in pre-market trading. The reason why is because they sold some preferred shares. There was a lawsuit that basically is going to have a merging of the two classes of shares. Basically, it's share dilution. But Tom, what it shows is some of these meme stocks are still memeing big time at a time when there still is a lot of volatility.
I mean, you're better at this than I am because you got the offspring on the couch day trading through Robinhood. But the basic idea is the meme thing still memey?
To a lesser degree, but yes. I mean, to a lesser degree, though. And this is partly because perhaps people don't have the same degree of free money. But there was some theory that people were getting the kickoff from all of their mutual fund money, the fact that they're putting their money into money market funds that are getting 5% interest, and then they're using that to play. There was a theory about that a couple months ago that's fading a little bit. But there still is this feeling around some of these areas, especially over the last few months, that people are wondering, is this the last gasps of something a little bit more frivolous?
A lot of disparate opinions. Barbara Reinhardt, a confirmed bull with us moments ago with Voya Financial. In the bond space right now, it is always important to check in with Greg Peters. He's the co-CIO at PGIM Fixed Income, and Farmore has a mantle at home with all sorts of investment managers of the year in fixed income. Greg, thank you for joining us. Just as you rewrite the 12/31 outlook for PGIM, you do this on March 31. What do you adjust to look forward within a fixed income portfolio?
Yeah, so I think what you adjust is the probability of a recession. So we were actually reasonably optimistic that the Fed could achieve a soft landing. That's still a possibility, Tom, for sure. But I think the probability of a recession is much higher today, just given what's occurring in the banking space. So, you know, I think the theme that continues from last year into this year is one of uncertainty. You basically have a set of, you know, scenarios and bimodal, trimodal type of outcomes. It makes it a very difficult space to navigate. And I think as a consequence, you'll see volatility quite high, which actually creates opportunities at the same time. So it's one of these things where the overall macro picture is cloudy, but we're seeing a lot of opportunities within the space.
Greg Peters, what Global Wall Street wants to know from you, and I guess it's PGIM in general, but let's go to Greg Peters. What's the new duration forward? I mean, what point on the maturity curve is a comfortable place to be given endless algebraic epsilon, given the reality of uncertainty?
Well, so, you know, it is contingent on your outlook, of course, but I do believe that rates are too high over the medium to long term. That will, you know, be remedied over time. Effectively, if you're worried about a recession, then adding duration, having risk out the curve via duration is a very good place to be. And the question you have to ask yourself as an investor is, do you think the 10-year yield will be, this called 3.5% 5 years forward, 3 years forward? And if the answer is no, I think it will be lower, then, weather the volatility and add duration.
So what do you make, Greg, if you think that rates are going to be higher for, or rather I should say, if you think that rates are going to be lower for a longer period of time, then what is the Fed getting wrong? How do you push back against a Federal Reserve that keeps saying we're going to keep rates elevated and we see inflation as a serious concern?
Yeah, but inflation is a serious concern. So one begets the other. So in order to get, rates lower over time, central banks have to be viewed as inflation fighters. If they lose that credibility, then rates will just naturally rise. So one begets the other, Lisa. And so it's really critical for the Fed and other central banks to be viewed as vigilant around inflation, because credibility is based off that. And if central banks lose that credibility, they lose the ability to actually kind of manage the yield curve, if you would. So it's really important to get it right over the near term. And if anything, err on the side of, eliminating inflation in the system. I think that's job number one.
Okay, so given that, do you think that rates are too high on the longer end or on the shorter end? In other words, do you think that this market has been overly aggressive with pricing out rate hikes and basically saying to the Fed, you're done, and oh yeah, you're going to cut rates by almost 100 basis points in the next 12 months?
I do. I think the markets are way too optimistic around the notion of rate cuts. To me, I don't see that playing out, precisely because inflation remains quite high. So I don't see the scope for central banks, namely the Fed here, cutting rates in the manner that the markets are suggesting. So that seems off to me, quite frankly, and we're leaning against that notion. So we don't necessarily see the rate cuts being priced into the market coming to fruition. So that's one area of the market that we think is completely off.
So based on what you're saying, which is that short end rates could stay high and even be much higher, and long-term rates could fall much lower, we're talking about a really substantial inverted yield curve, perhaps even more than 100 basis points that we saw earlier this year. Is that correct, Greg?
Yeah, so I think that is the path forward. Unless you really get this, harsh recession with inflation coming down pretty rapidly, then I expect the yield curve to remain inverted and continue to get even more inverted. So I still have this triple-digit target between 2s and 10s. I think that's where we land, and that's what we're forecasting.
Well, I got 4 questions, Greg, but no time for it. Where's the 10-year yield a year from now off of that triple-digit inverted curve?
I think there's a very good chance that the 10-year just kind of moves around, plus or minus 20 basis points. So I don't see at this point in time, given the data, and you guys mentioned how we're so data dependent, so it makes it hard to forecast, but I don't really see a radical shift over the near term, 12 months, but on the 10-year part of the curve, unless you get a real change in the economy, including inflation. So those are the big caveats, of course.
Greg Peters, thank you so much with PGIM and PGIM Fixed Income this morning. Lisa, my head is spinning on the bond market. And, as an equity guy, I look at the Bloomberg Total Return Index with all of its heritage of Barclays and Lehman, and it's real simple. It's a very elegant chart, and I find very few people looking at the trend of price up, yield down. There seems to be an immense disbelief that could happen.
Well, except it seems like perhaps equities are getting the message, and there's a tension right now. How much do lower bond yields act as a support for equity markets that previously really used that as a boost? It's a big question because lower bond yields ultimately come on the heels of softer growth or potentially even a recession. And that's a real tension right now as people look to the gains that we have seen. I think that we got 2 back-to-back quarters of the best gains, if you look at this consecutively in 7 years, just now at the end of the first quarter, Tom.
And I'm looking at the bank rate 30 mortgage. You can do that, folks, on the Bloomberg terminal. It's right in front of you if you type in our wonderful search engine. I mean, am I supposed to celebrate that we've gone from a 7% 30-year mortgage to 6.75? I don't think that's enough to get it done, Lisa.
Well, people who bought home builder shares perhaps see something quite different. You are seeing signs that the housing market has hit a bottom and is starting to recuperate.
Mm-hmm.
And some people say it's not just that mortgage rates are going down, it's that they've stopped going up. And so there's a feeling of what we're working with. And that is something that people are pointing to. Can I just point something else about this Jamie Dimon letter? I was reading some reports on it. It was really interesting that Jamie Dimon not only blamed regulators for missing the issues in plain sight, as they said, with respect to Silicon Valley Bank, but they also blamed regulations that forced banks to hold huge portfolios of treasuries on their balance sheets as a ballast, as a safety point, and then had policies that caused yields to go up, price to go down, and create a huge liability on a mark-to-market basis on some of these banks' balance sheets. It's kind of this irony that crises always happen in instruments that you deem safe. And that is what we have seen, at least when it comes to some of these regional banks with their huge holdings of U.S. government debt.
I call that David Goldman 101 in honor of the former lead strategist at Bank of America, where everybody focuses, Lisa, on the distressed tranches, the garbage of a given derivative instrument. And it's in the quality instruments, the quality tranches, usually where you see the pain. We're going to dive into that annual report, and particularly the succession plans of J.P. Morgan with our Shonali Basak. We'll do that here in the vicinity of 30 minutes. As well, economic data. We begin a buoyant Tuesday, Wednesday, Thursday, onto the jobs report Friday. We'll have full coverage of that as well. Futures up 13. This is Bloomberg Surveillance.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. The New York City Police Department, U.S. Secret Service, and other authorities are on high alert as Donald Trump is set to be arraigned this afternoon in Lower Manhattan. The former president's indictment has sparked a political firestorm as he makes a comeback bid for the White House. Trump's lawyers say he will plead not guilty. The case involves hush money payments made to a porn star during the 2016 campaign. Taiwan is defending President Tsai Ing-wen's plan to meet with U.S. lawmakers, led by House Speaker Kevin McCarthy. The meeting is set for Wednesday in Southern California. Taiwan says it is the right of Taiwanese to have exchanges with Democratic counties. China says it will take what it calls resolute measures to safeguard its sovereignty. Russia has taken over the rotating presidency of the United Nations Security Council. Its ambassador made it clear that it will use the opportunity to promote its defense of the war in Ukraine. The U.S. ambassador to the UN, Linda Thomas-Greenfield, called the matter an April Fool's joke and said Russia will use the chance to spread disinformation. Jamie Dimon is taking a shot at the Federal Reserve over the banking crisis. In his annual letter to shareholders, the CEO of J.P. Morgan Chase wrote that Silicon Valley Bank's blunders went untested by the Fed. Dimon says they were hiding in plain sight until Wall Street and depositors grew alarmed. And in sports, the University of Connecticut has won its 5th NCAA men's basketball title. The Huskies beat San Diego State 76-59 in Monday night's final in Houston. UConn's Adama Sanogo finished with 17 points and 10 rebounds and was named the tournament's most outstanding player. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
We are still going to see an inflation from that, but we've seen wage gains moderating quite a bit. So that, I think, is a hopeful sign. But the disinflationary process is in, I think it's in process, it's in train. We're not there yet.
At the University of Michigan, Lisa Cook, a Federal Reserve governor there, really as we move to the May 3rd meeting, some interesting takes. Lisa Abramowicz mentioning a very busy day of Fed speak, including Mester of Cleveland will be there as well. Lisa Abramowicz in Washington. I'm Tom Keene in New York. Lisa, how'd your bracket work out?
I think I failed. March Madness took over in a very different way, considering the past couple of weeks and everything we've been dealing with, Tom.
Feel better, Lisa. Your bracket was better than my bracket. We have a wonderful annual ritual here at Bloomberg Within Brackets, which is various worthies commit to charity and support, and there's always a winner. It's something to do with the parquet floor. Steve Pagliuca is senior advisor at Bain Capital, co-owner of the Boston Celtics. Mr. Pagliuca was the winner of the Bloomberg Brackets for a Cause. How the hell did he do this? He picked UConn to win March Madness. The Huskies dazzled 76-59 in a win over San Diego State. And, of course, of $1 million Brackets for a Cause pot will go to Mr. Pagliuca's charity, Reform Alliance, a charity helping people get out of prison and move on to constructive jobs. I do have to note here in a careful review, because we provide transparency here at Bloomberg, we went from Grauer to Pagliuca. Peter Grauer, Lisa, Peter Grauer came in here underperforming, I guess is how we'll constructively put that. Bill Ackman, Jay Clayton together. That's the first time they've ever been together, underperforming, as they say, dazzling up higher. Cliff Asness, respectable. When Michael Bloomberg, Lisa, did better than good, and we noticed Jonathan Gray at Blackstone, among others, all aced out by Steve Pagliuca. Steve, what in the ether did you do to win this bracket? What did you see? Is it like the day-to-day grind of the Celtics means that you've got it all figured out?
I wish that was the case. I think I was just lucky and happy to have the money go to the Reform Alliance. As you said, it's an amazing charity set up by Robert Kraft and Michael Rubin to get prisoners work. And we have 4 million people on parole in the system, and really needs to be reformed and rehab. So I'm very grateful to Bloomberg and grateful to the basketball gods that helped me this year.
The basketball gods gave us as well, and I'm not up to speed on this, Steve, and if I'm out of turn, say so. Boy, did the women deliver a tourney this year. It seemed to be a real turning point where America paid attention in a new way to women's NCAA basketball.
Absolutely. I think all the women's sports are getting more attention. People love to watch sports, and the level of competition was probably the best ever in the women's tournament. The woman Clark was just electric out there. Fantastic final.
Steve, an important day for all of global Wall Street, and particularly American Wall Street. James Dimon and team at J.P. Morgan publish a letter. They speak there of the storm clouds to come. This is Mr. Dimon and his team looking at SVB and the banking crisis. How do the storm clouds look from Boston this morning?
Well, as you know, Tom, we've talked about this before. Lots of tough dynamics right now. The war in Ukraine, oil prices going up, interest rates gapping up, which has caused some of these problems. So, we're definitely heading into murky waters. The good news is there's still a lot of jobs out there. Technology is coming back. Biotech is growing. So we have some pockets of good things happening, but we're in the midst of a correction where we basically had a 10-year kind of growth bubble based on cheap money, and it's going to be painful to come out of that.
What's the distinction, Steve, between a credit crunch and just credit tightening, as many people see ongoing right now?
Well, a credit crunch would be just a total lack of liquidity, and I think right now you're just seeing tightening. And again, we're getting back to normalized interest rates. For most of my career, interest rates have been 4.5% to 5%. Only in the last 12 or 13 years have they gapped down. So, and that cheap money has brought a lot of prosperity, but now we're kind of paying the price for having that long time cheap money. But we're seeing a tightening now. I don't think we're seeing a crunch. The banks, J.P. Morgan, Bank of America, were very well capitalized today.
Which is the reason why a lot of people are saying they can still take out credit cards, they can still take out loans, especially if they have good credit. And banks are continuing to lend to businesses that continue to hire in a major way. As an investor, does this make debt look much more valuable than even the equity side of the balance sheet as an investor, simply because they can pay back their debts, but perhaps equity needs a reevaluation?
Well, again, it's to me, I step back. It's basically based on the price you pay for the asset. So we've been in periods in private equity where debt levels are 10% equity, 90% debt. Those days are gone. Deals are much more conservatively financed, so the debt burden is not as high these days. These are 60% debt, 50% debt is common in today's structures. Debt is still available for good deals. and good deals have repriced. So you're now seeing some opportunities in the tech sector and other companies that are back down to reasonable valuations.
Based on what you're seeing in the day-to-day of the companies that you work with and that you see, and the fans that go in droves to all of the games and continue to spend money, do you feel like people who are calling for a recession are perhaps misguided, or do you think that you are seeing a real softening that's borne out by empirical data?
We have not seen the empirical data yet showing a dramatic softening. Airlines are still full, restaurants are still full. So we've not seen that in our companies. It can be to come, especially with the expensive money out there, and a little pullback in the credit markets. But right now, consumers are still out there, and we haven't seen highly negative data. I'm worried about the recent oil price increase. That is going to increase inflation, and is that going to bring us even higher interest rates? But right now, we're, I think, in an uncertain period, maybe heading towards a recession, but hopefully a soft landing.
Steve, I got to go back a number of days here. The basic idea here of what the Celtics did to the Bucks. I mean, this is on the edge of what UConn did throughout this entire tournament. Are the Celtics destined this year like University of Connecticut?
I certainly hope so. We have a great bunch of players, really great on and off the court, and they really pulled together and had a fantastic game against Milwaukee. But Milwaukee's a great team. So, as they say in the kind of 100-year sports analogy, you've got to take one game at a time, and that's what they're doing, having fun together, and hopefully winning out the rest of the season and doing great in the playoffs. So we're excited. We're really excited for the prospects.
Stu Paliuka there with a charity of Robert Kraft of the New England Patriots here, as he is the winner of our bracket this year. Lisa, I'm absolutely fascinated by this, and that the business of sports, as Michael Barr talks about it, it seems like post-pandemic, it's taken on a whole new energy. I don't know what to make of it. I can't, are we going to be starting paying shortstops billions of dollars over a lifetime? I just, there's a whole new energy to the land of Paliuka.
This is something we've been talking about for a while. How much is it the post-pandemic world, and how much is it a trend that's been building over the past decade or perhaps 20 years with shifts in the market and shifts in the financing of some of these teams? But you're right. It seems as if the business of sports is getting so much more attention, not just from investors, but also on a broader level. And you're right. I mean, this is something that's been really big. I want to pick up, though, on one thing that Steve said that I thought was fascinating. The oil price issue. Do oil prices mean potentially higher inflation? Do they mean higher rates? How much has the game changed? And we were talking about this yesterday, Tom. How much do the cuts from OPEC Plus change the narrative in some sort of, perhaps maybe not super material, but marginal way? We're hearing that. And yet it's not being borne out in the market, at least on the debt side today, but certainly continues to be on the oil market.
Yeah, I mean, you're going to watch debt with hydrocarbons always. I would point out, folks, I did a careful study yesterday of where is the breach of resistance on Brent crude, and it's just, this is just amateur level, $90 per barrel. We're not there yet, $85.61 a barrel as well. I need to do a complete data check here to get us through to the next hour. Chanel Basek at 8:15 on the succession plans alluded to by Mr. Diamond at J.P. Morgan. Futures up 11, Dow futures up 35. Fractional moves up, not as buoyant as what we saw 2 hours ago, but nevertheless a lift. 18.83 on the VIX, 210 spread, comes in fractionally. Thank you, Greg Peters, for wisdom. From PGIM, the real yield, this has my attention, 1.14% on the real yield. That's a lower real yield over the last number of days. That 2-year, 4.02%. Lisa Abramowicz in Washington. I'm Tom Keene in New York. John Farrow on assignment. This is Bloomberg.
I feel like the sources of inflation are generally on the mend.
If things are better, we're going to see a situation of inflation tolerance.
With conviction, the unemployment rate is going to rise, and it's going to rise fast and furious.
I don't think the Fed's seeking that sufficiently restrictive level of policy.
I hope the Federal Reserve is not going to resume the pattern of trying to get down to zero lower bound negative real rates. It doesn't work.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowicz.
Countdown to a labor market report, or perhaps countdown to a senior loan officer survey later in May. From Washington, D.C., for our audience worldwide, good morning. This is Bloomberg Surveillance. Tom Keene, Jonathan Ferro, and Lisa Abramowicz. John is off today. I am in Washington, D.C. But, Tom, very much front and center, labor market data is going to be front and focus today as people try to understand whether this is a market that is hanging on to steam or whether it is rolling over as quickly as some people are pricing in.
I'd agree. There's a new intent to look at the data from Tuesday on to Friday and all across the labor data. And Lisa, to me, the major issue here, and Mike McKee's better at this than I am, and that is when you tweak the GDP guesstimates, a la Atlanta GDP now, we had a buoyant above 3%. It's Morning in America statistic, and we're now down to a first quarter beneath 2%. So that's changed this labor analysis.
And how quickly it's moved. And yesterday's ISM data, manufacturing coming in at the weakest pace going back to the height of the pandemic, raising questions about how quickly we can see that turn, that shift that we're seeing priced into the bond market, with rate cuts squarely priced in, even as Fed officials push back, even as Greg Peters pushes back, even as so many people say this market has it wrong, the Fed has it right.
Let's go to the levels. 4166, SPX down near 34,000, NASDAQ 13,300. Barbara Reinhardt at Voya really pushed against all this navel-gazing, Lisa, and she just said, look, international had their moment, and now it's the time for the United States to outperform. I thought that was the major equity message of the morning.
Yeah, I love that she was also basically trolling all of the bears in the market, saying that the pain trade has been long cash and short equities, and that has been for the most part. But then you go to the Torsten Slok view, which is, are we just seeing 20 stocks support pretty much the entire market? And Tom, I think that that's why people are looking so closely at the Apples of the world, as you point to see how far they can kind of carry things forward.
Well, we're going to have to see on that on the data here. 85.82, nudging upward towards $86 on Brent crude. Currencies, dollar fractionally weaker. We started 3.98% on the 2-year yield, 4.02%. 10-year yield under 3.5%. I haven't said enough about that. Greg Peters alluding to that. And again, the equity market with the perma-lift that we have seen of the last number of weeks. Lisa?
Yeah, and he was also talking about that 10-year yield, and even if it stays around where it is, you could see an inverted yield curve back to some of the greatest inversions that we saw earlier this year. Meanwhile, stocks, as we've been talking about, resilient in the face of all of the banking turbulence and oil shock. J.P. Morgan's Marko Kolanovic, he was very bullish. Now he is very bearish. He warns that the Fed indicated no intention to cut interest rates this year, yet risk assets are exhibiting an unprecedented rally, with European stocks trading near all-time highs and U.S. stocks recovering recent losses. We expect a reversal in risk sentiment and the market retesting last year's low over the coming months. So
Lisa,
from Barbara Reinhardt's
we
record
gotta
high
stop
to
here.
that low.
I'm so glad you brought this up, and John Ferro would have featured this this morning. I really don't pay attention. Is anybody listening to that guy anymore? I mean, I say this with immense respect for his intellectual chops, but back 18 months, help me here, Lisa. Where's Marko been?
He's had a round trip. I'm not going to weigh in specifically on his clout in the market. I will say he is at a very major shop and at the helm of the equity research over there. Either way, I will say this. It presents the bear case at a time when the bulls and bears are becoming more entrenched in their positions, and we're not really clear on who's going to be right. I mean, let's just be very honest. But I think you raise a good question, which is, how do you figure out who to listen to at a time of such little information? Megan Horniman joins us right now, Chief Investment Officer at Veritas Capital Advisors. And Megan, as you hear the entrenched beliefs of the bulls and the bears, how do you sort of look to some compass to figure out where you should stack up?
So right now, what we're kind of leaning is towards more of a intermediate bear term case here for not only the economy, but also for the equity markets. We've seen a really massive rally. I mean, the S&P 500 is up about 7% from its recent low. The VIX is back down below 20. We have the PE multiple on the S&P 500 back now approaching 19 times. This looks like the market got a little bit ahead of itself in regards to what the expectation can be for the Federal Reserve. We don't lean in that camp that the Federal Reserve can cut rates this year. We think that they're going to have to raise rates rates one more time at least, and then stay on hold. So the markets are not pricing that in. We've seen that with this pretty big rally, as was mentioned with large cap tech, large cap growth. It's really a handful of names leading this rally because they're anticipating that the Fed can really take their foot off the pedal here and actually cut rates, and we just don't see that happening.
Yesterday was the first day in the second quarter, and we talked a lot about how people keep rewriting their views for the look forwards and they keep changing their baseline assumptions. How have your baseline assumptions changed in the past 3 months?
Coming into the year, we were nervous about the economy. There was a lot of signs that the consumer wasn't going to be able to continue to be as resilient as it was. So that was really our base case coming in, that we would probably see a recession or at least a significant slowdown in growth. But what's changed for us is you throw on that now this banking crisis or the banking turmoil that we've had. And now you're talking about another layer of risk to economic growth through tighter lending standards. And lastly, you throw in the fact that the Fed's hands are now tied. They're in a difficult situation. The market's looking for cuts, but we still have inflation that is not fully behind us. And now you have oil prices that are back higher again that are going to make the Fed's job even more difficult. So we've gotten more concerned about the economic growth climate for this year. And we actually have started to take some of the risk off of the table with them in the equity market.
Megan, good morning. In your sharp note, buried in it, you talk about commercial real estate. I've been just studying this like cranes as I go city to city on what's happening in the United States. Do you look at commercial real estate as discrete and separate to the real estate world and maybe to REITs as well, like the Blackstone news yesterday? Or does it have an angst that can permeate out into the broader market?
I think I don't think it's a systemic situation like we talked about, back at 2008 or 2009, but I do think people are getting a bit complacent to what risk that can have to the market. Commercial real estate was already a concern, but you talk about this maturity wall in 2023 and 2024 at the same time that you have banks now tightening lending standards because of what happened in the first quarter. That's a recipe for some significant downside on the commercial real estate space. Now, from residential real estate, we have to keep in mind that we still do have a structural shortage of homes in the United States. So I think long-term that still has some support. But commercial real estate is something that no one's really talking about and we think can be a risk to the market.
Unfair question. What are your clients doing right now? I'm really, your account holders, maybe they had a bull market and they participated in it. Maybe they demanded that Megan Horniman's in cash. Oops, we missed it. What's the mood now in the first week of April among Verint's capital clients?
Well, first of all, our clients are longer term. So we look at the broad asset allocation and we try and make a diversified asset allocation for a long term. But we do have clients and that agree with what we're doing. Take some risk off the table because you have to look at where the market's priced. So the market has seen such a big move higher here, not only in the fourth quarter, but then now we've seen after the banking crisis, just this big rebound. It does warrant, just taking some risk off the table. And especially since in the fixed income market, you're starting to get some yields. It's not really as bad as it used to be to sit on cash, have dry powder, have liquidity, be ready to look for opportunities when they arise.
Are you more likely to invest in oil and oil majors given what we saw yesterday and over the weekend?
The energy market itself, that sector has seen such a rally. So it did have some give back when energy prices went down, but it has had such a rally. We still do like it because it's similar to housing. Structurally, we haven't solved the energy issue globally. So structurally, there still is support there for the energy sector. You have to be selective. You have to look at what's priced in. You have to look at from the specific company level. But honestly, the commodity space as a whole is something that we're looking to invest in when we do get a downturn in economic growth. It does tend to be one of the bigger return potentials when you come out of a recession.
Megan Horniman, thank you so much. With Verdant's Capital Advisors today. Greatly appreciate it this morning. We're going to come up here with Shonali Basak, and she's so wired into the people of Wall Street, and particularly New York Wall Street. I mean, global Wall Street, but particularly New York Wall Street. We're really going to focus on the James Dimon letter and any possible succession that we would see for Mr. Dimon. But Lisa, I think we've got to do an overlay right now of the letter. I perceive it as bank analysis. How's the bank doing? And then I perceive it, as you mentioned earlier, really terse statements on this banking crisis and regulators. And then basically it's Mr. Dimon. I wonder if he's lobbying to be the Secretary of Treasury after Janet Yellen, because there's an entire section here on policy prescription, and democracy.
We've seen that a lot, though, from Jamie Dimon.
We have, but now
kind of
this
trying
year,
to make some sort of bigger statements, right? And so we will get some sort of sense of what he's trying to send in terms of a message to Washington, D.C. On the banking front, the message is clear, and it's stop blaming us for your issues. You guys have problems. You gave us regulations that forced us to own treasuries. Now with our mark-to-market losses that you're trying to mitigate against. You made us have all of this capital on our books. We're safe and sound. And then, oh yeah, you knew there was a problem at SVB and you did nothing. This is basically a warning call, a warning shot saying, stop it, be consistent, don't have knee-jerk responses, don't overregulate, and don't tax us for your problems. I mean, that to me is what I read in this.
And they've got here, of course, the headlines here. The messaging that they're selling, as any company would do within a annual report. 2.5 trillion sustainable development target, 10 million to support Ukraine. Number one in customer satisfaction. Bramo, I thought surveillance was number one in customer satisfaction. We're working on that.
Well, we'll tell Jamie Dimon. Our people will talk to his people.
There's too much optimism today. We had the gentlelady from Voya Investment, her bullish call on the markets. Neil Dutta. Hey, he looks like Neil Diamond, actually. He can sing like him. Neil Dutta of Renaissance Macro at 8:30, one of our most popular guests. Mr. Dutta will allocate a 1.7% American GDP somewhere towards optimism. Futures up 12, Dow futures up 45. Good morning.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. There's never been a day like this in Manhattan. Former President Trump is in town to surrender to law enforcement officers, be booked, hear the charges against him, and enter his plea not guilty. The case involves hush money payments to a porn star during the 2016 campaign. New York City authorities say they're prepared for any disturbances. Oil has extended its rally following that surprise production cut by OPEC+. West Texas Intermediate was up after rising more than 6% on Monday. The cartel's cutback prompted many banks to jack up their price forecasts. Federal Reserve Governor Lisa Cook says inflation in the U.S. has started easing, but she warns that price pressures could stay in place due to a tight labor market, the war in Ukraine, and the reopening of China. Now, Cook said it will be important to watch how much more credit tightens in the wake of bank turmoil. Finland is formally becoming the 31st member of NATO. Today's ceremony in Brussels completes a tumultuous process that was sparked by Russia's invasion of Ukraine. Now, Finland's addition will bring the military alliance more than 800 miles from the border with Russia. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
The median person on the committee says a little over 5%. I'm a little higher than that. I think inflation will be stickier. We're still talking about a lot of inflation, more than double our inflation target on that basis. And oil prices fluctuate around. It's hard to track exactly. Some of that might feed into inflation and make our job a little bit more difficult.
Made news and moved the market. Michael McKee with James Bullard of the St. Louis Fed yesterday. He minced no words about it. He is on an inflation watch. We've seen it certainly with an oil. Lisa's talked this morning about oil migrating up $69. West Texas is now $81. We've gone from a 69 handle to 80.99 on NYMEX crude. Brent crude 85.47. The two-year yield back above 4%, 4.01%. Lisa Abramowicz in Washington. Her conversation today with David Malpass and other worthies of the World Bank and the International Monetary Fund, really moving towards our Washington spring meeting coverage here in a week. John Ferro is off today. Right now, and within the delicacies of an annual report, what's a big guy going to do? And James Dimon, with his typical confidence and heritage, says, you know what? We've got a hit by the truck strategy, which is not comedy. Because in December of I believe it was 29 or 30, Winston Churchill was seriously hit by a car on Fifth Avenue. And Shonali Basak joins us now. And I mean, this is a serious thing that every company must do. But how does the visible J.P. Morgan set up a hit by the truck and then onto that succession plan?
Yeah, over at Berkshire Hathaway, they call this the man in the envelope strategy, or the person in the envelope strategy. Who takes over if Jamie Dimon is not there at J.P. Morgan? He talks about it in the shareholder letter. He says at every board meeting, with or without the CEO, who's also the chairman, they talk about succession planning. And remember, he has now one very clear number two, who's Daniel Pinto, but he also has two women who have been rising into different roles, now leading community banking, more than 66 million people, households served around the world over at JP Morgan, that these two women are responsible for.
And then they leave. You are encyclopedic on whether Marianne Lake or Jennifer Piszak leave, but they leave JP Morgan because he's going to be there forever. With this annual letter, what's the measurement of forever for Mr. Dimon?
That's a great question, because he's getting on to 2 decades of leading JP Morgan.
He mentioned it early, 2000, Bank One. Yeah.
How many times do people say, is JP Morgan bigger or too big without Jamie Dimon here? Is this another Citigroup situation in Sandy Weill, who of course Jamie Dimon was his protege as well? So I think that's the big question here. Are these two women ready to take over? How soon would they take over? What else do they need to take over? You have Jennifer Piszak here, who had ran investment banking, different investment banking operations, had different parts of the bank under her wing. You have Marianne Lake, who was a CFO, very front-facing. They talk about the relationship with asset managers and investors, not only those individual investors who now will have more power when it comes to proxy voting as well, but also those large investors that they deal with at the asset manager that is only becoming a more important part of the bank.
Shonali, when we talk about cult of personality and Jamie Dimon is really at the helm of it, how much is the message that he was sending to Washington, D.C., how much does that take on a new precedence or sort of a new prominence in the discussion about how to handle some of the bank failures we've seen of late?
He has a very nuanced take in this letter, isn't it, Lisa? Because he talks about how J.P. Morgan banks 350 of more than 4,000 of America's own banks. But remember, for J.P. Morgan, they also talk about all the challenges it is to be a bank. We talk about the recent move in money market funds, Lisa, but he mentions that $650 billion have moved since April 2022 into money market funds. Meanwhile, deposits at large banks are down by $1 trillion. And so you think about this wholesale shift in the banking system and what it means for America's banks and the ability to both bring in deposits as well as lend money out to communities. There is a real conundrum here that has been brewing for structural reasons in the market. And now he's also saying that he's not saying don't regulate the banks. He's just saying think about what mix of regulations will make this banking system healthier. And I think that is the debate that is being had as we watch the failure of Silicon Valley Bank.
There also is a lot of finger pointing. Let's be very clear. He talks about how they missed some issues that were hiding in plain sight, that when they regulate, they create problems, including having a lot of these banks hold huge portfolios of treasuries and then having to figure out what to do with potential mark-to-market losses as rates rise. What is his influence in Washington, D.C. right now at a time when perhaps banks aren't as much persona non grata in Washington, D.C., but certainly aren't welcomed with open arms?
Yeah, how fascinating is it? Because you think about the last few years where we had a return to that annual bringing CEOs down to Congress again. That has not been a practice over the last decade, but in the last couple of years, it's been an annual meeting, if you will, and those banks have been grilled, particularly about their presence in these communities, particularly when it comes to mortgages. And by the way, that is something that Dimon is telling you in this letter, that it's become an unattractive business in so many ways, particularly because Wall Street has left the business behind.
And I read the letter, every word of it. I sit down and full disclosure, Shonali, with a beverage of my choice in my hand. Is he running for Secretary of Treasury? I mean, I look at the back third. There's a Wall Street Journal op-ed reprint. He's talking about policy, democracy, I should say. Is this guy running for Secretary of Treasury?
That's been the forever parlor game. Is it Jamie Dimon?
Well, I'm doing it right now. I mean, here we are with a letter. Are we going to be talking about Secretary Dimon?
I think it's interesting when our own Ed Hammond asked him the question whether he'd consider a government post. He shunned the idea at that time. That was only a couple of months ago at this time. He has said he's wanted to stay at the helm of J.P. Morgan, but I think every year that goes by...
I mean, Secretary Mellon, a million years ago, and I'm not making a Mellon-Diamond equivalency here, but how do you say no to that job?
You know, you can ask the same of Brian Moynihan as well. I mean, I think the question about whether these bankers have a future in government as a Treasury Secretary in a future administration in particular is a big question, and will the populace allow for it? I think Lisa's question here about, you know, the love-hate with the bankers is an interesting one, because there's a lot of criticism now from Wall Street when you look at the Biden administration about whether some of the regulators have the intimacy when it comes to the financial industry to regulate, and not just by the letter of the law, but by means of supervision appropriately.
First question of the earnings season. I'll give it to you, Chanel Bassick. Are we going to see a lot of layoffs?
I think you're also going to see people bring on people that have been left behind in the layoffs we're already seeing. But yeah, I think you will. Remember, something interesting next week, Tom, is you have First Republic anticipated to come before J.P. Morgan. Usually J.P. Morgan leads off the wave, but you have to wonder what happens next Thursday when we get all those answers about First Republic that nobody today knows.
That's like an unscheduled earnings report?
It's anticipated.
How dare they get in front of Fortress?
Well, it's kind of the more important story today.
Did you get an advance copy of this letter?
Lisa,
did. She's the only one that would get an advance copy. I mean, I didn't get one. I don't.
Yeah.
It's just that simple.
You know what he's going to cover every year, but
it's nuanced every year.
It is.
Yeah.
It is.
Okay.
The devil's in the details.
Chanel Bassick, chief letter reader here at Bloomberg, and of course working with all of our financial system as well. Lisa, I look at the data screen today, and I guess we're churning, and the truth is we're churning into really important labor data. You mentioned that at the top of the hour. And all of a sudden, from JOLTS to the jobs report on Friday, labor is front and center.
Yeah, and we do get that job opening data at 10 a.m. Eastern today. I will say that whatever the churn is right now, it'll probably churn upward by the end of the day, because that seems to be the mood. At least that was what it was yesterday, and it has been for a bit. Is there a signal there? And Tom, you were asking about this earlier. Is there a signal in risk assets continuing to rally, despite people saying all the negatives coming out one after the other?
The good news is we don't have the time here for a boring lecture, but Adam Tooze got us started this weekend looking at nominal GDP. Add on that inflation to real GDP, and boy, does that change the dynamics, including what we will see in Washington. Lisa Abramowicz in Washington with David Malpass later, and then we move on to the meetings of the World Bank and the International Monetary Fund over the next 10 days. On economic data, Neil Dutta next. Futures up 13. This is Bloomberg Surveillance. Bloomberg Surveillance. Good morning, everyone. From Washington, from New York, Lisa Abramowicz with David Malpass now in transit. John Ferro is off today. I'm Tom Keene. Thank you so much on radio and television for joining us. The next 30 minutes are going to be extraordinary. We're going to finish strong with Richard Haass, of course, of the Council on Foreign Relations. Ambassador Haass will join us here on the State of the Nation, his wonderful new book, and, of course, what we're observing in Lower Manhattan. Kriti Gupta is in Lower Manhattan, and we'll have all of that coverage for you into the afternoon of the arraignment of a former president. Maria Tadeo is in Brussels. We'll go to her in a bit here. It's a stunningly historic day for Europe. There's no other word for it. Absolutely stunning. Never in my imagination would I consider Finland to join NATO. And before that, a real treat, and particularly for optimists on the American economic experience, Neil Dutta will join us. Futures up 12 right now. The VIX 18.86. I got a 4.00% two-year yield. Let's leave it at that. He is with Renaissance Macro. He is aware we moved from an Atlanta GDP now number of 3.x%, under 2% as well. The world turning against the optimism of Neil Dutta. Neil Dutta, do you like the Atlanta GDP now statistic? Is it of value?
Oh, of course it's a value, Tom. But like anything, your assumptions drive your conclusions. And the Atlanta Fed number had a sharp downward revision yesterday because of the ISM manufacturing PMI. Now, the ISM manufacturing PMI, last I checked, doesn't formally get booked into the GDP calculation. So it's important to remember that the GDP Now estimate is not a pure sort of bean counting exercise. What does go into GDP, by the way, is unit auto sales. And auto sales came in a little bit better than expected in March. And that tells me that motor vehicles, consumption on motor vehicles will be a significant boost to first quarter GDP. And remember that because of the ISM number, the Atlanta Fed has, had a sharp downward revision to their durable goods consumption estimates for Q1. So, it's important to kind of understand how these numbers work as opposed to just sort of blindly saying, look, it's down. That's not right. It's not that easy.
Well, we appreciate the analysis of it versus it's down or it's up as well. What is the state of the American consumer now? There's so many cross currents, many of us witnessing packed airplanes, buoyant travel, and yet real worry about different deciles of the American people. What is the state of that consumer?
Well, I think the most important thing is that real incomes have been climbing. And ultimately, that is going to plant the seeds of future consumer spending. To me, it's really that straightforward. And I expect real consumer spending, real incomes to continue climbing into the second quarter. Remember, natural gas prices have come down. That's going to bleed into household utility bills over the second quarter. Given the state of the labor market, which is still okay, that's going to mean stronger real income growth in the second quarter, which will in turn support real consumer spending. So I know there's a lot of angst around the consumer, and we've gone from kind of talking about weird seasonal adjustment factors. Maybe it was the warm weather, but at the end of the day, when you look at consumer spending relative to where it was, trending before the pandemic, it's off the charts. So I think the bears still have a lot of explaining to do. I don't really think the consumer is about to fall off the cliff here.
Well, Neil, we've got to make note here. You've been dead on about the lack of recession and the resiliency of the American consumer. The zeitgeist right now, Neil Dutta, as you know, off Adam Tooze's essay in the Financial Times, is a new respect for nominal GDP, which is that real GDP with the movable dynamic of inflation overlaid on top of it. Now, you've got nominal GDP, you've got incomes, whether real or top line, and then it boosts right into corporate revenues as well, maybe giving us a buoyant stock market. What does nominal GDP do over the next 9 months?
I think the underlying trend of nominal growth is around 5 to 6%, which makes, these sort of calls that basically overlay like corporate earnings on the ISM sort of pointless. I mean, it's all in the market. I mean, the sort of earnings recession that the bears have kind of been talking about. I mean, to me, it's very difficult to get a steeper earnings recession from at this point because nominal incomes are running, nominal growth is running 5 to 6%. At the same time, keep in mind that the dollar is off about 6.5% over the last 6 months or so. That's also a tailwind for corporate earnings. And importantly, in my world, it's a tailwind for real export activity over the next year. So a lot of what's traded in the markets are, large multinationals that do a lot of business overseas. And if the global economy is looking a bit better than it did last year, which I think is really, frankly, undeniable, then that's gonna bleed into to corporate earnings, which should support U.S. equity prices.
Now, Dutta, one more question. We've got to run off to Brussels here in a historic moment for Europe. But first, to you, finally here on the Fed Derby. All of the gloom that's out there, the Fed has to adapt in a responsible, data-dependent way. What data matters for them on the road to May 3rd?
Well, I mean, this is going to sound, pretty obvious, I think. But to me, it's employment and inflation. And remember, we only get one jobs number between now and the May meeting. And I think that's really not enough time for them to assess the fallout from what we saw in the middle of March with the banking stresses that flared up. Now, that being said, the consensus and the Fed are assuming a sudden stop in the economy. recession is imminent. We're about to fall off the cliff. I mean, these are the sort of things that you hear about, from the consensus economics community. I utterly reject that view. I think the economy is not collapsing. We're probably growing at potential. And that's going to mean that the unemployment rate is not going to rise in a way that everyone expects. And that ultimately leaves inflation, I think, unresolved, frankly. And that's why I think, give it till June. We get a couple more jobs numbers at that point. We'll see that, we're still cranking out a decent number of jobs. And ultimately, I think that's going to mean the next Fed move will be a hike.
Neil Dutta, thank you so much for joining us. Too brief a visit this morning. He is with Renaissance Macro Research. There is history made in Europe today. I really can't emphasize enough the importance of this moment, unimaginable within any thinking I've ever done on international relations. The flag is a young flag and is a flag of a blue cross. Coming out of World War I, Finland was formed out of different constituencies and always within the hundreds of years, a massive Finnish tension, I should say, with Russia, with the Soviet Union, and now again with Russia. Today, Finland, the independent Finland, will join NATO. With this historic moment in Brussels are Maria Tadeo. Maria, just simple as I can, they will join this group. Why do they leave neutrality?
Well, Tom, to put it very simply, because of the war in Ukraine, that completely changed the game for Finland. The reason why we're going to see this flag fly here at NATO headquarters in about an hour from now is the war in Ukraine. This was a shock for Eastern Europe, for the Baltics, for the Nordics, this idea that in 2023, Russia, by force, could attack a neighbor. This is not something in the past. It's happening right now as we speak in Europe. That was a real wake-up call for countries like Finland, but also remember Sweden. And you alluded to this at the start of the show. You would have never imagined a day like this. So this shows in real time the ramifications of this war. And today, really, we cannot stress this enough. This is history in the making. This is a country going from neutrality to joining what is now the biggest military alliance in the world.
Is it feasible that Switzerland would follow, or Sweden under debate right now? I understand Turkish-Swedish tensions. Will there be others behind Finland?
Look, and Switzerland, that's a complicated one. There's others. Remember, also, you look at countries like Austria, which is also neutral. But I think the next step will be Sweden. Remember, these are two countries that wanted to join together. In fact, there was a joint bid for the application. Now it's become a split bid because of the problems with Turkey. But the next one here will be Sweden. And in fact, when you talk to officials here, what they say is that they want to get this country, meaning Sweden, in NATO by the Vilnius NATO summit. So that will be in the summer. Right. So, Tom, we talk about a new member that is 31, but I presume very soon we're going to be talking about 32. Again, this is really history in the making, Tom.
Right. Maria, the border and the history that the Finns are extremely comfortable with a rifle in their hand. You look at the winter war of World War II with Russia, et cetera. They're trying to build a wall right now. It's not a wall of China. Will there be some form of wall on that long, long border, north and south, between Finland and Russia?
Look, I'm not sure about a border, but what is clear is that Finland has been preparing. I mean, this is not a NATO story. This is already years in the making, and you alluded to the winter war. This is a very traumatic episode for the country. This is also the reason why they have the sympathy for Ukraine, this idea that you're fighting for your sovereignty and you don't want to give land away to Russia. In terms of what NATO brings to Finland and what Finland brings to NATO, in many ways, they're already compatible. We know that a lot of the military, the army, the spending, the systems that they use are compatible, and every NATO official today says the security, not just of the Nordics, but really the Baltic Sea, this will be emboldened by Finland joining in today. And politically, obviously, for the Finnish government and the Finnish president, this is a huge political win.
In the next hour, History Made in Europe, I'm Maria Tadeo in Brussels at NATO headquarters. And I just can't say enough. For those of you a bit younger, this is truly extraordinary. We're seeing that so much here in the last number of weeks, as I mentioned earlier to Leslie Vinger Murray, to see King Charles III at Brandenburg Gate, to see Finland joining NATO as a world tipped upside down. We're going to drive forward this conversation, continue to look at economics, finance, and investment with futures up 10, Dow futures up 35. A churn to the market waiting for this important economic data really begins with a vengeance at 10 o'clock. Let me get that up on the Bloomberg. I can do that with ECO Go. Yes, at 10 a.m., the JOLTS job openings. Michael McKee suggesting that's his key labor data. Durable goods, maybe it flies, no pun intended, flies below the radar with the Boeing volatility, but nevertheless important data there. And then on to the ADP report of Wednesday, claims on Thursday, and into the important job report Friday as well. We continue this conversation on America, our civic responsibility, and our diplomacy. Richard Haass joins us. He's president of the Council on Foreign Relations on this historic day for NATO and Finland. Ambassador Haass in moments. Please stay with us on radio, on television. This is Bloomberg Surveillance.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. The New York City Police Department, U.S. Secret Service, and other authorities are on high alert as Donald Trump is set to be arraigned this afternoon in Lower Manhattan. The former president's indictment has sparked a political firestorm as he makes a comeback bid for the White House. Trump's lawyers say he will plead not guilty. The case involves hush money payments made to a porn star during the 2016 campaign. Taiwan is defending President Tsai Ing-wen's plan to meet with U.S. lawmakers, led by House Speaker Kevin McCarthy. The meeting is set for Wednesday in Southern California. Taiwan says it is the right of Taiwanese to have exchanges with democratic counties. And China says it will take what it calls resolute measures to safeguard its sovereignty. Russia has taken over the rotating presidency of the United Nations Security Council. Its ambassador made it clear that it will use the opportunity to promote its defense of the war in Ukraine. The U.S. ambassador to the UN, Linda Thomas-Greenfield, called the matter an April Fool's joke and said Russia will use the chance to spread disinformation. Bloomberg's learned that Warner Brothers Discovery is close to a deal for an online TV series based on the best-selling Harry Potter young adult books. Now, each season of the series would be based on one of J.K. Rowling's bestsellers. Warner Brothers previously turned each of the books into a hit movie. And former Meta Platforms executive Sheryl Sandberg is helping bring women's professional soccer to the San Francisco Bay Area. The National Women's Soccer League has awarded the rights to an expansion team to a group that includes the investment firm Sixth Street and Sandberg and her husband. The $125 million investment is the largest to date in women's soccer. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
Across Europe, there is a real concern whether Donald Trump is coming back, whether the Trump wing of the party is coming back, and that matters for Europe because it's taken as a sign that the United States wouldn't be as committed to NATO if that were to pass. And we all know that it's really U.S. military support that has saved the day when it comes to the war.
Visiting from London, Leslie Vinge-Murray with Chatham House, head of the U.S. and America's program. She was on fire today about some of these selected topics in international relations and economics, finance, and investment. We welcome you on radio and television. Futures up 9, Dow futures up 19. Yield, well, it's good. Give me back and forth. I think we need to see economic data. We'll see that at 10 o'clock this morning on to the Friday jobs report. Dollar weaker a little bit. I don't want to make too much of that. What am I watching inside baseball? I'm watching euro, yen. This is euro stronger. Jordan Rochester of Nomura coming out modeling 115, 120 euro dollar. I don't know what that does to euro yen, but it puts it into new territory with weak yen, stronger euro. That's just, I had to do some inside baseball there. We're all international relations now. Richard Haass is about ready to walk off the stage here, president of the Council on Foreign Relations, author of The Bill of Obligations, The 10 Habits of Good Citizenship, on this morning where our heads are spinning. Home and Away. It's the name of his new Substack effort. Richard Haass joins us on the home and the way. Richard, let's go to the away first. And the way is when you were at Oberlin a million years ago, you were falling asleep on a 2 p.m. Thursday afternoon, and somebody said Finland will forever remain neutral. And here you and I are looking at Finland to enter NATO. How did we get here?
Tom, if you had asked me that when I was in college, I would have said the Cold War was permanent. So much has happened that I didn't quite anticipate. I think this is part of the unintended consequence of Mr. Putin's war. People thought after the Cold War ended, NATO lacked a rationale. Its old rationale has come back on stilts. And the fact that Finland is in NATO, Sweden's moving in that direction, again, this is what Mr. Putin has wrought. We never could have done it, shall we say, without him.
When I look at the map, and I don't have it in front of me, folks, I flunked Finnish geography, but if you come down to the bottom near Helsinki and you move over to the east, NATO is not all that far from St. Petersburg, is it? It's remarkable. We worried about Ukraine being close. Condoleezza Rice, Robert Gates, and others pushing back on Ukraine and NATO. My word, NATO to St. Petersburg now is a quick ride, Ambassador, isn't it?
That, and you've also got far more border for Russia to worry about. Again, strategically, this makes zero sense. I think what it shows from Putin's point of view, either he didn't see this happening, or if he did, he didn't much care, Tom. He's put so much of an emphasis on Ukraine. He's in some ways rolled the dice. His own presidency depends upon it, that my guess is whatever cost he has to pay, whether it's manpower, economically, strategically, he's prepared to pay, because he's put at risk his own political future and the future of authoritarian Russia.
Chris, thank you for the headline across the Bloomberg terminal. Finland officially joins NATO, is 31st member. Maria Tadeo is in Brussels and will be looking for ceremony there, I believe, in the next hour. Let us turn home of your Home and Away Substack effort. Retired Ambassador Haass here from the Council on Foreign Relations. The home event, well, I've got to go down Fifth Avenue, past Trump Tower, and maybe down into Center Street as well. Your comments on the bills and the obligations, Richard, that President Trump has to this process of indictment and arraignment.
Well, Tom, it's more than an obligation to follow the law. Obligations are things you should do but don't have to do. And Donald Trump has been a serial violator of obligations. The idea of norms, the peaceful transfer of political power, the most basic defining norm of American democracy. He violated that. Civility, he violates on a daily basis. His signaling about political violence, another violation. The idea of putting country before party or person. I would say in many ways his whole career is a violation of that obligation. The law, though, is something else, and we have a system for dealing with it. That's why we have courts and the like. Obligations, though, are something citizens have to insist upon, and that brings it all back to the ballot box. He could well be the Republican nominee. I think what this indictment has done in some ways is frozen the other Republican candidates. It increases the odds Donald Trump is the Republican nominee. And let's be brutally honest, if Donald Trump is the Republican nominee, Tom, he's one of the two most likely people to be the next president of the United States.
Richard Haass, I don't want to be inflammatory here, and I want to take the arc up to 1860. It can be Kansas, Nebraska, and the rest. But there's a mood there now of disunion, of a nation not that would break up. I just don't want to go there, but of this absolute polarization we see with the former president's poll ratings and such. With your people at CFR, how close are we to a dialogue of disunion, if not outright disunion?
I'm not worried about formal disunion. I agree with you, Tom, but we already have very separate Americas. The red versus blue. Look at life expectancy, the differences between red and blue states. You look at, people now are really separated by geography, by religion, by what cable shows they watch. That really worries me. That increasingly America, which is a country founded on ideas, we no longer have a common set of ideas. It's one of the many prices we pay for not teaching civics in our schools. We're not requiring civics. I'm not worried about a civil war, Tom. But I am worried about something else. You were teasing me about my ambassadorial hat. I was the U.S. envoy to Northern Ireland. This spring, we marked 25 years since the so-called Troubles. The political and violence in Northern Ireland pretty much came to an end. I worry about an American version of the Troubles, where we could have fairly frequent, decentralized political violence in this gun-loaded country of ours. That is not something we can dismiss.
How would the Troubles of Ireland been different? And of course, this is with a wonderful Irish movie that was Oscar-worthy this year. How would the Troubles, Richard Haass, have been different if we'd had Twitter at the time?
Would have been much worse. What Twitter does is, it's called social media, Tom. It's not serious media. It's not factual media. So Twitter allows people to traffic in misinformation or selective information. That's what social media does. And it's really dangerous. It reinforces the tribalism of any society. And, our democracy is 2.5 centuries old. We're celebrating the Declaration of Independence in 3 years. It's 250th anniversary. We were not made in some ways for the age of social media.
I look where we are, Richard Haass, and of course the import today, and a toggle switch here, a president that will go to arraignment, be peaceful, quiet, but he speaks tonight from Mar-a-Lago. What would you want to hear from President Trump tonight from Mar-a-Lago?
Look, what I would want to hear him do is put country first, to talk about the importance of the law, the legal process, that he'll respect it, not to attack judges, not to attack prosecutors, to basically, this is part of what makes America America is the rule of law. It's basic, Tom, for all the business people watching your show. This is it's the oxygen of American society. What I would like to see Donald Trump do is respect the rule of law.
Richard, to finish up here, let's come full circle here as we looked away and then home. The center tendency of 2022 was a shock of February in Vladimir Putin. He has to be thunderstruck today at not only what he sees in the United States and the events on the island of Manhattan, but what he sees in Finland as well. How would you presume someone so cloistered in the Kremlin, how would you presume he will respond to these new 2023 shocks?
Obviously unhappy about Finland, but he will be in some ways feeling good about events here. It reinforces his sense, Tom, that time is on his side, that the United States and European support for Ukraine is potentially weak. It will cause Putin to dig in his heels. You had Leslie Van talking about it before. A lot of our allies are uneasy about a return of Trump or Trumpism and all that means. But for someone like Putin, for Xi Jinping, for some others in the Middle East, they will welcome the possibility of our going back to the future here.
I said this a couple years ago, folks. Richard Haass, The World was the book of the summer. It was the summer book you threw at an older child and said, shut up and read this. And the Bill of Obligations follows right behind it. It's first class on civics needed in America. Richard Haass is with the Council on Foreign Relations, and his Substack effort is home and away as well. Futures up 11, Dow futures up 24. Just an extraordinary, I can say, folks, in all the years of doing this act, I've never seen so many disparate threads on one day here. What's the foundation of what we do at Bloomberg Surveillance? It's the economic data. Michael McKee will give you perspective here beginning at 10 a.m. The JOLTS survey is really our kickoff data point to find out where this American economy is. Please stay with us on radio, on television. This is Bloomberg. Good morning.